All right.
Alrighty.
Hey, Grizzle. The conference series is back. We got them all here. Scott Willis, Margot Rubin, Tom George. We are Grizzle, and we are putting on Battery Metals one-on-one. Thank you guys so much for joining. Hey, listen, if you are on Twitterland, do us a solid. We're coming with the heat every time. The retweet, please. Thank you. On YouTube, fam, you know what to do. Thumbs up. Love all around. Guys, we got a jam-packed agenda today. But first,
as usual, what's new?
What's new? But first, we need Scott. How should we kick this off? We got the partners here that we got to give a shout out to. This wouldn't be possible. These are some of the big names here. First off, our lead partners for Grizzle Battery Metals one-on-one, WisdomTree, none other than the leader in ETFs, commodities, tactical, thematic, digital assets. You talk about it, smart beta. And when you're talking vanadium, there's one name in the world, and that's Largo. And then Red Cloud Financial Services. These guys are the hustle, the bustle that comes down to mining in the world. In the center of that world is Toronto. Then finally, Capital 10X when it comes to small, mid-cap mining. Nobody does it better visualizing it and doing the deep research than Capital 10X. All right,
guys. So why are we here today? So I see investors and especially the media spending all their time talking about electric vehicles. But I have a hard truth to tell you. You don't have electric vehicles without the battery metals that go in them. So we're doing what Grizzle does best. We wanted to learn about battery metals. Where do you put your money? So we put together all the experts. We're going to ask them, where are they investing their money? What's going on? What's coming next? Buckle up. We got a packed agenda. So...
So to kick things off, we're starting with the Chief Operating Officer of Benchmark Mineral Intelligence. And you guys are really known for your in-depth research when it comes to analyzing the supply chains for electric vehicles. So Andy Miller, thanks for joining us today.
Thanks for having me, guys.
And just starting off, can you tell us or tell our audience what Benchmark Mineral Intelligence is really about?
Sure. So Benchmark is a market intelligence firm specializing in the lithium-ion battery supply chain. So we cover everything from the batteries going into the electric vehicles right back upstream to the raw materials coming out of the ground. So your lithium, your cobalt, your nickel. And what Benchmark is really, our purpose is to provide some transparency, some information, some data around what's happening in the supply chain. Ultimately, the supply chain has become the biggest limiting factor to the adoption of electric vehicles and clean energy. And for that reason, we try and shine a light on some opaque markets where people often don't know too much about exactly what's happening on the ground. That's what we specialize in.
And we know the EV market is facing a lot of supply chain issues right now. How does North America's battery metals production compare to the demand we're seeing for EVs?
Yeah, so North America today is in a position where downstream it's started to do a huge amount downstream. So you've seen the multi-billions of dollars now committed in terms of building out not just electric vehicle, but actually battery production in North America. The bigger question now comes is how quickly can North America scale the supply chain, the upstream of the raw materials that are going to be needed to sustain that type of growth. So with the slight exception of nickel, where Canada already has a pretty strong base in terms of nickel production. But outside of that nickel production, you're really not seeing the expansions happening at the speed that's going to be needed to meet those EV ambitions. So the big race right now is how quickly can we scale that supply chain?
So Andy, I just want to clarify, are you saying you are seeing money start to flood in at the kind of the base level for the exploration and the building of mining, CapEx? Like, so there's money starting to realize that there's an issue here, but we still have a lot of work to do.
Absolutely. Money is going in. It's just not going in at the speed that's really going to be needed to sustain what we're seeing downstream. We're all familiar with the new models that are coming out from every major automaker around the world. Those are being scheduled for the next 1 to 3 years in a lot of cases. The issue is to develop the raw materials needed to build those electric vehicles takes a much longer lead time effectively. So yes, capital is moving. We're in a good price environment as well for a lot of these raw materials, which of course is incentivizing more money to flow in, but still we're playing catch up with what's happening downstream.
And I know the supply chain is rather complex, and I think we have a chart we can put up, but where are the biggest risks in the supply chain right now?
So I'd say, the biggest risks, simply because of the time frame to build out different parts of the supply chain, are the further you go upstream. So what you see on this slide here is that actually, if you look through to 2030, we're on a pretty good course for North America to be able to sustain its own EV production in terms of the battery cells that it's going to be producing. So you've seen the huge investments particularly from Korean battery makers like LG and SK in the US. And the big intentions there to expand battery production in the US. But as you take it a step further upstream, and that really being the midstream, which is your anode and cathode, those are your two primary components of a battery. We're still way behind on your anode and cathode. And if you take that one step further and you look at the raw materials, what this graph here shows is the lithium, cobalt, nickel, which are three of your most critical raw materials in a lithium ion battery. What it shows you is that we still have a long way to go from raw materials. And even in the case of nickel, that bar on the far right hand side, what I was saying in terms of, Canada already produces nickel. But what you see is over time, because the ambitions of North America are growing at such a speed, that actually by 2030, we start to fall behind in how much nickel is actually being produced in North America. So all three of these raw materials are going to need major expansion to meet sort of regional demand. And it's not just limited to these either. You can look at manganese, you can look at graphite. There's a huge mix of different minerals and metals that are going to come under severe pressure to meet that downstream demand.
And so how will the deficit in lithium, cobalt, and nickel, specifically in North America, impact the development of EVs?
Yeah, well, the good news, I suppose, is that there is this stuff out there. These raw materials are being produced today, and they're geologically, and in the most case, the slight exception of cobalt, we're not talking about geologically scarce raw materials. It's just about building up the infrastructure to be producing them at scale. So I think, when you look at the case of North America, I see it as a bit like, that children's game musical chairs. It's not that no one's going to have a chair to sit in when the music stops. It's just that, in some cases, there's going to be some losers out there that won't be able to fulfill what they're trying to do in terms of EV production in the future. So, it's about strategically positioning North America at the moment to be able to not just produce what it can as much as it can regionally, but also have strategic partnerships in place where you can start to tap into supply that's already pretty established in other parts of the world, and partnering with other nations that are going to be able to support that. So it's not all doom and gloom. Yes, there's a huge mountain to climb for EV producers, but that's why you're seeing such momentum from the major names out there at the moment, committing to, you've never seen automakers really in the past start to commit their names to mining projects, right? They've always
Andy, that's something totally different, and it just if there's one indicator, the fact that an automaker feels that they need to integrate across the board, it's just so wild. To me, it just seems like if you're an automaker, do what you're good at, but it tells you how dire the situation is. It has to, right?
Absolutely, and I'm sure that a lot of those automakers would prefer to just stick being automakers. But back to your point about the money going into the market, it's what they've come to understand as they put, in a lot of cases, I think it's not too far to say that a lot of these companies have sort of bet their future on the ability to move towards electric. These are major automakers that are betting billions of dollars that they're going to be able to succeed in their push towards electrification. Increasingly, particularly over the last couple of years, they've had to come to the realization that you're not going to be able to do it at scale. There's not going to be the scale to fulfill all of this emerging demand. So they need to take a more active role. The public markets aren't going to do it. The capital isn't available in a lot of cases for those upstream suppliers to do it themselves, to scale at that type of rate. So they're having to get involved in markets that are far outside their area of expertise. And they're having to become, automakers in some instances are having to become miners almost. They're having to invest in projects and become involved in projects that they just haven't had to in the past.
Hey, Andy, I just want to ask you, do you have an estimate of, of that money that we're seeing going in? Is a significant portion coming from the companies that are seeing growing demand for battery metals versus usually it would be, public industry, private industry doing that? I'm wondering what you're seeing.
Yeah, do you mean in the case of the other miners sort of providing the capital themselves to do these expansions?
Yeah, like usually you would see the miners or maybe private equity that's in the mining space would be investing, but you're saying you're seeing the companies that are going to have growing demand at the end of the chain for these metals are having to invest. Are they really a meaningful part of the money that you're seeing going into the industry?
So they are a meaningful amount of money, but it's not moving the needle far enough effectively. So one of the big issues around the lithium-ion battery supply chain today is it's pretty fragmented. There's lots of different steps. So you can talk about an automaker that's going to need all of this raw material, but the fact of the matter is that if you're a lithium producer, a cobalt producer, a nickel producer, you're not selling to an automaker. You're selling to a cathode company, which then sells to a battery company, which then sells to an automaker. What automakers are now having to do, because the capital just isn't available in those upstream steps in the supply chain. So automakers are the ones that have some capital to put to use, and they're having to say, right, we're going to have to start investing this and directing this ourselves. So it's not that the miners aren't responding in some way, but you're facing double-digit growth rates for the next decade across this market in pretty much every step in the supply chain. So when you're talking about that scale of growth, even miners that are doing very well for themselves are going to have some hesitancy if they're not being given the signals from the downstream consumers of the raw material.
So then what's the solution to fix the supply chain bottlenecks or the deficits we're seeing in the battery metals market? I know you've talked about recycling EVs as a potential solution.
Yeah, recycling, and less so recycling EVs. Actually, recycling is going to play a big part in the coming decade. Actually, through the process scrap is going to be the more important factor in that. So as you see from these graphs here, it's actually the light shaded bit on the top that represents the process scrap. And what you can see is that it only really becomes dominated by your end of life batteries into the 2030s. For the next decade or so, we're very much dependent on process scrap filling some of that demand. So that's efficiencies in production along the supply chain and being able to recover some of the material which doesn't go into your final applications. But recycling as a whole is going to play a massive role. That being said, you're talking about a growing market. Recycling itself is never going to fulfill the total demand out there. So it's not that we need to shift away from mining, it's that we need to develop a recycling infrastructure which can supplement what the raw material production is doing.
So Andy, if I'm just to read through the fact that recycling is such an important wedge here, surely the takeaway there is recycling is never the cheapest form of picking off a metal, right? So with respect to pricing itself, it tells you exactly where the marginal price setting is. It's going to be very high. Is that the right takeaway?
Yeah, absolutely. Recycling is going to play a big role, but also if you look at the new mine supply that's coming on stream, we're not really finding cheaper sources of lithium, cobalt, nickel production out there. In the most cases, they are relying on new technologies to extract those resources, which entail much higher cost in many cases. So, yeah, the cost curve is moving up. There's no doubt about that, and I think the prices are going to have to shift that way to sustain, continued expansion in production.
I just want to get one more quick thought on the recycling. Do you think, is that going to require government subsidies to kind of really get going? Or do you think there's enough profitability and capital willing to fund that industry to get it going on its own?
Again, there is money going into it, but it's definitely not going fast enough. And I think what you're going to see industry have already realized that this is going to be, if you're an automaker, it's going to become a part of your liability to make sure there is somewhere for those batteries to go at end of life. You can't have millions of EV-sized batteries lying around the streets at the end of life. So EVs companies see it as a potential liability in the future. They're working very hard on it. The upstream industry, realize there's a huge potential here to maybe unlock some new sources of supply that they haven't had in the past. The issue is technology. Recycling, as you say, at the moment, the economics aren't particularly favorable in a lot of cases. And for many of the developers that you're seeing in the recycling space, they're sort of contingent on developing or refining a technology, which is going to take, often takes, several years to commercialize. So having the backing of governments, having involvement from governments in promoting, further investment in technology plays in recycling will play an important role, definitely.
Very interesting.
Okay, before we wrap up, just one more question. Is there a certain metric that you can use to measure if a battery metal is at risk of being replaced? Like, let's say it's expensive or hard to mine and produce cobalt. Could that be replaced by something else in the future?
The idea of replacement is really feeds back to less, the economics. So it really comes back to the technology, and what we always, point towards is sort of the time frame it's taken to build out the lithium-ion battery supply chain we see today. The pathway to commercialization is typically several decades long for a new technology, particularly if you're talking about a new technology you're going to put in something as sensitive as a car that's going on the roads and people are going to jump in every day. So I think that the shift away to new technologies, I see it more as diversifying the landscape for batteries. You hear a lot about LFP coming into play, different types of nickel chemistries coming into play to sort of deal with some of these issues. All that really does is sort of spread the burden around different technologies. And really, you're looking at such a huge number of applications. Everyone wants to think about the Teslas driving around that they see on the road or the new VW model. This is much bigger than even just those passenger cars that you and I might buy in the future to move to electric. This is trucks, this is buses, this is a whole transportation fleet infrastructure and new applications, scooters, bikes, all of these new applications which are being built around batteries. So there will be lots of different technologies out there. Shifting away and shifting technology to sort of address some of the supply chain issues is not really going to solve the problem, because you're going to see growth across all of these markets. So it's really about a case of playing with the two. Yes, work with technology, but also have the ability and start working on building that supply chain today, because we know the direction it's going in the future.
Man, Andy, this has been super fascinating. I think we could talk for another, hour or 2 hours. So we're going to have to bring you back on sometime. But thank you so much for sharing your insights with us. This has been Andy Miller of Benchmark Mineral Intelligence.
Thank you, Andy.
Thanks, guys.
All right, everybody. The train keeps rolling. Don't go anywhere. We're going to be right back with vanadium, the vanadium miner. That's one of the critical battery metals. We're going to be right back after a quick break with Largo Inc. Don't go anywhere.
Alberto, how's it going? Our good friend
Very
from
well,
Largo.
very well. Very excited to be here.
Thank you
for the invitation.
Thank you very much. We just did a great pod with Alberto Arias, chairman of Largo. Thank you so much for joining us with a very unique metal. Indeed, it is vanadium. Scott, kicking this off.
I have a lot to ask you, Alberto. I hope you're ready.
I'm ready. I'm ready.
All right. So Largo has gone, in a short amount of time from a pure play vanadium miner to what we call a diversified play on the renewable energy economy, basically. So could you tell us about the opportunities that drove you to make these changes at Largo?
Yes, Largo is the largest primary vanadium producer in the world. We produce around 7% of the world supply of vanadium. We have the highest grade mine among the major producers of vanadium. So that gives us a great cost competitive advantage. We have a solid, we're listed in NASDAQ. We have a solid balance sheet. And your question is right. Why a company that is in such a comfortable competitive position in the mining industry create a clean energy division? And the answer to that question is value creation for our shareholders and for the industry. We saw among our customers a great opportunity to improve our contribution to reduce the carbon footprint and contribute to the clean energy revolution, which we think is one of the most important trends we're seeing. And a couple of years ago, we created that division. We bought some technology in the United States. Now we are manufacturing parts of those systems, and we're on our way to have a very exciting future, not only as a supplier of vanadium, but also create this value-added part of the vanadium value chain, which is in the batteries.
That's great. Okay, so I was actually surprised to see there was an article in Forbes written by JP Morgan's Michael Sembalist that quoted that vanadium redox flow batteries, which is Largo's technology, will likely play a big part in the future of renewable energy. So could you briefly explain for everyone watching the opportunities you see ahead for large-scale, reliable energy storage?
Yeah, a lot of industry experts in energy consider that there is an explosive growth of demand in the long duration energy storage, the batteries. And vanadium redox flow batteries has some key competitive advantages that are positioning that industry to take a share of that significant growth. There is a consultant called Guidehouse that conducted a study that they project that they are going to have 33 gigawatt hours of storage on the vanadium redox flow battery. If this happens, that would represent, that's by the year 2031, that would be a 41% compounded annual growth rate in those years. So that is a very exciting proposition for the vanadium industry. Just to give you a sense of the size that we're talking about, it is equivalent, that type of demand will require 10 to 12 Largos. And Largo produces around 7% of the world supply. So that gives you the great opportunity we have in front of us. And we want to contribute to make it happen.
Everyone listening, do you see there's a trend here? All these growth numbers are just astronomical as you look at mining or even other industries as well. That's why we thought it was so important to do this type of event on battery metals. So let's keep rolling. So as you look at your battery technology, what milestones do you think you need to gain comfort that then you're ready to start scaling this technology aggressively?
Right. Well, we can see several milestones in front of us. Particularly on Largo, we're very committed on the deployment of our first battery in Mallorca, Spain. This is a 6.1 megawatt hour battery system to Enel. We recently published that we have completed the manufacturing of the stacks. We're already shipping them to Mallorca along with the electrolyte, and the commissioning is expected in the first quarter of next year. So that's a very important milestone for us. The second one, a couple of months ago, we announced the signing of a memorandum of understanding with a leader in the combustion gas turbine manufacturing industry. The name of the company is Ansaldo in Italy, and we are negotiating a joint venture for the manufacturing and the commercialization of our battery systems. And this is a great partner to have because they have a long tradition and they're very well established as a leading manufacturer of energy systems. They have great relationships with the electric utilities. And given what we're seeing in Europe, these massive amounts of capex going into the green revolution and the clean energy transition, it's an ideal partner on the manufacturing and commercialization of our system. So that's something that's a key milestone for us, and it's a regional joint venture that we're currently negotiating. And then the last one that I would say is the implementation of Largo Physical Vanadium. Largo Physical Vanadium is a company that we have established that it will act as an ETF of vanadium. And I think this is going to be a game changer for the adoption of the vanadium redox flow battery technology. What this ETF-like instrument does, it basically segregates the ownership of vanadium so that our battery customers do not have to worry anymore about the cost of vanadium or the volatility of vanadium, which was the biggest problem for the adoption of that technology. If you look a couple of years back and you talk with these battery customers, they would say, yeah, vanadium redox flow battery is great, but vanadium is 40% of the cost of the batteries, and sometimes there's volatility. So what happens if the price of vanadium spikes like it has done in the past? Well, this Largo Physical Vanadium that we have created solves this problem for the first time, because that battery customer is going to get the vanadium almost for free from Largo Physical Vanadium. Basically, they are going to be storing the vanadium for the ETF in the batteries. And why is that possible? Because there is a unique characteristic of vanadium that we are making use of that was never being considered before. That unique characteristic is that vanadium does not degrade in its application on the batteries. You could have it for 20 years and it remains pretty much the same because there's no cross-contamination in the electrolyte. The vanadium is in an electrolyte form. So that unique characteristic can be used as an ETF storage, and we're really creating something that is very innovative and I think a game changer, and I think something to watch. It started trading at the end of September, so you could actually have investors that buy and sell that instrument depending on their views of vanadium. We're very excited about that.
That's very interesting, Alberto. So this is all, like, if I was to just rethink about what this. So if I were invested in a gold ETF, say I'm kind of, a physical gold ETF that has to sit in some vault. You're saying that vault for you guys, for Largo Vanadium Corp, is physical vanadium, is that vault is actually a battery.
Or if I had to give a bad example, it's like turning the vault into a tourist attraction where you're charging money, right? And so you're generating some type of return. It's not just sitting there, and it allows investors to get exposure to the price of vanadium when they never could before.
Exactly. What is so interesting is that this will be the first ETF of a physical commodity that you have the physical commodity actually doing something useful for society. Like the gold ETF, the silver ETF, it's stored in a vault, as you said, but it's doing nothing. It's accumulating dust. In this concept, you are actually having the vanadium working for you and basically enabling the economics of vanadium redox flow battery to be better and have its positive contribution on this clean energy revolution. Like for investors that care about ESG, and we do care about ESG, and this is why we formed it, investors can buy the Largo Physical Vanadium and know that they have a physical backing on something that is fully recyclable, but it actually is working towards the positive contribution of decarbonization of the energy industry.
Now, but before we have to switch to the next guest, I wanted to ask you, you have a really interesting chart in your deck that shows pretty significant growth in free cash flow expectations over the next few years. I was just wondering if you could help investors understand what is driving this significant growth that you expect.
Yeah, those charts are in our technical report that we published last year, and that was just on our mining division. That doesn't take into account what I just described. It's incredible. And just the mining division, you will see a growth of EBITDA over the next 2 to 3 years to the order of around $200 million of EBITDA per year, going up to 400 by the year 2028. And to answer your question is what is driving this increase in EBITDA is that we are implementing a titanium project. In addition to our vanadium production, the ore in our mine has another element called titanium. And before we didn't recover it, but we are now implementing the first phase of the titanium project in which we are going to start recovering something that we didn't recover before. And we're building the first ilmenite flotation plant that is going to start having positive contribution next year, enhance our competitive advantage as a mine. But later in the later stages of that titanium project, we will produce a pigment as well, which has a much more value added. So we are evolving as a company, not only improving what I said at the beginning about what we're doing in the clean energy space, but our business of mining is actually going to get better as we extract more value out of the ore that we produce.
Well, Alberto, it looks like you guys are aggressively, driving the vanadium market forward and the renewables market forward. So a lot of interesting things going on at Largo. Thank you so much for stopping by Battery Metals, and we hope to speak with you more soon.
Alberto, thank you.
Thank you. Thank you for the invitation. Glad to come back whenever you want.
Of course.
Great. All right, everyone. That was Alberto Arias. He's executive chairman of Largo Inc. Now, don't go anywhere because our next speaker has a really interesting business model that I both of us here have never seen before. So coming up next, we're going to be talking with the CEO of Amerigo. Don't go anywhere.
Welcome back to Grizzle, Battery Metals Con, one-on-one. We are very great. We have a phenomenal guest today, Aurora Davidson, CEO of Amerigo. Thank you for joining us, Aurora.
Thank you, Grizzles. Happy to be here.
So
double.
Yeah, exactly, double here.
It.
No, well, yeah, this is a fascinating business model, and easily one of the most unique business models we've seen, particularly in mining. Aurora, could you provide us an overview of the company?
Sure, absolutely. Happy to do that. We are, as you were saying, quite a different story because we produce copper. And the interesting part is that we don't have a copper mine to do that.
Right.
What we're doing is essentially recovering copper from significant waste streams. In our case, these are the waste streams coming from one of Chile's largest copper mines, El Teniente mine, which is, just as a curious remark, the world's largest underground copper mine. So they produce a huge amount of waste on a daily basis. They send it over to our plant, and we'll take a look at it and how that happens later on if you want to. So we receive those waste streams, we process those waste streams with the objective of recovering copper fundamentally. We also recover some molybdenum and moly. And once we have recovered that copper, we do it in the form of a concentrate, we sell it. We get market prices for the recovered copper, for the recovered moly. Our concentrates have essentially, essentially the same shape and format as concentrates produced by traditional mines. So this is essentially a way of producing required metals, critical metals, without any traditional mining activity.
It's fascinating indeed, and in terms of scale, is there any other company doing it on this, like recycling at this level of scale in terms of, at this business? Like, I've never heard of anything like this.
No, we are the only company in the world that is doing it for copper at this scale. And it's not insignificant. We are essentially the same size as a mid-sized copper mine.
Incredible. I mean, that's
Wow.
incredible. So, just given, you walked us through the process here and just how it's done. Now, from that, you can say, Amerigo's copper can be viewed as some of the most sustainable sourced copper in the world. And in fact, copper being used for EVs, like you're almost getting the full, the full trifecta, if you will. Could you talk about, the asset and the types of investors that have been drawn to the company? Surely this kind of green credential around the type of, the type of resource extraction that you're doing and, and the sustainability around it has probably attracted some unique investors.
Sure, but let me just go back to the first part of your question, which was just to talk about the sustainability aspect of our copper. And I think there are three fundamental aspects to consider here. One of them is that we are essentially recovering it from the waste stream. So the material is already sitting there. It would be wasted if we didn't have the process that we have at our operation in Chile to recover that copper. Now, another very important aspect is how do we get that material? How do we get that waste stream into our plant? And it's essentially by gravity. So believe it or not, there is not an ounce of transportation involved. It's just gravity. The mine is located up in the Andes Mountain. We're midway between the mine and their tailings deposit, and we basically function as a bypass operation in a very virtuous way of receiving that waste material. And just to comment on another sustainability aspect of ours, we are doing all of this with green energy ourselves. All of our operations are powered with green energy as of 2 years ago. The type of investors that have been attracted to Amerigo traditionally were your plain vanilla mining investors, right? It was just exposure to copper. That's what drove them into the company. But in the last 2 years, since I've been since I took over as CEO, we have been rebranding the company to really showcase the attributes of sustainability, as you're talking about. We do have a totally different ESG story with us, and it's not aspirational, it's real. That's what we're doing. And the other aspect that we're also working on is the yield aspect of our story, because we are paying a dividend. It's not it's a substantial dividend. So I think that refocusing us from traditional mining, which is usually a growth story, it's an aspirational story, to a story that is more utility-like with significant ESG attributes and a yield component. That's where we're working on.
Yeah, so just to give our audience some context, when Aurora talks about a substantial yield, we're talking about a substantial yield. So the dividend yield is 12% for Amerigo. That is very, very differentiated. It's clearly a big draw to the company for investors. Now, could you talk about how the company thinks about capital return and the company's framework for dividend payments? Obviously, the green aspect of the company is one key pillar, but the dividend is clearly something very attractive as well.
Absolutely. Look, we are in a sweet spot of our corporate development where we do not need to continue investing a substantial amount of the cash that is generated into the company. We have low capex requirements. We are not seeking growth for the sake of growth. So what do we do with that capital that has been generated by the business in this mature stage? We are returning it to our shareholders. And we have devised a return model that is essentially built up of three different tools, because there is cyclicality within the industry, within the copper market, and we have to work around that. So the first aspect, the first tool of our return of capital policy are the quarterly dividends. And that's where the 12% yield is coming from, just exclusively from this component. We're paying quarterly dividends of 3 cents Canadian per share per quarter. And that represents a 12% yield at the moment. We've also been quite involved in the last year on share buybacks. We actually have retired more than 10% of our issued and outstanding, spent $21.1 million US doing that. And a third aspect of our return of capital policy will be, we haven't deployed this yet, the performance dividends. And you ask, performance to what? Performance to copper price. So in periods of sustained higher copper prices, we will be working with performance dividends, which will be flexible in all aspects. When can they be declared, for how much, how often? So that will give us the additional tool to deploy surplus cash back to the shareholders.
It's a unique, multi-leg strategy here. So just so I understand that correctly, obviously there's the nature of the dividend, but then if copper prices were, to have some leverage, you have tools with the buyback and a special potentially.
Correct. Our quarterly dividend is set to be a protected dividend. We want that to be reliable. We want that to be a given. So it's set up at 3 cents Canadian per share per quarter. Right now, that's what we're doing. Copper prices are on a little bit of a slump compared to where they were earlier on in the year. But with recovery of copper prices, the other elements will be again deployed.
And so just the sustainability of the dividend, obviously you guys have put Amerigo has put a lot of thought into, okay, we've established a dividend. We obviously don't want to, pull that, we want to keep that going. I know you guys have, there's a way you guys think about how you sustain that dividend. I know, just how your cash flows back that up. Maybe you could talk a little bit about that.
Sure. We're very tied. Our corporate performance is very tied to copper prices, and it's very, very sensitive. We have on our presentation deck a slide that shows for the 2022 guidance that we have, which is to produce over 62 million pounds of copper. You can see what a dollar difference in copper price does to free cash flow to equity. And let's take the $3.80 example. That basically guides you towards a generation of $11 million of free cash flow to equity. You jump that up a dollar and you get $43 million of free cash flow to equity. We came into 2022 with a strong balance sheet that can sustain a period of sustained lower copper prices, as we have seen in the last 5 months, without having to curtail that dividend. So we knew going on that we know that there's always going to be that volatility. Having said that, volatility in the copper market is occurring at higher ranges, at higher copper price ranges. So that's part of the game, and that's why we have these tools, right, to protect the base dividend and to have the ability of deploying additional cash back to shareholders when copper market conditions are strong.
Fantastic. And with respect to, obviously, it's a hybrid company, right? It's for an investor. You guys have an interesting slide in the deck, but yeah, you think you can probably talk to it. How should investors say, hey, this is a mining, this is a mining comparable company, obviously that, that's your end product, or you're a wastewater company, you're treating wastewater. And I think your dividend, I think you were comparing it to other water treatment companies, and it's significantly higher than that. How should an investor think about that?
I think that if you think of us, if you go back to the core business proposition, the analogy with the wastewater treatment plant is a better analogy than a traditional mine. If you're talking to a total novice and you use that example, here's what we do, they'll get it right away. If you're trying to say we're a mine, but we're not a mine, we're working with waste, it gets too confusing and there's no added value to that story. But the real differentiator here, and this is very important, is that how does a wastewater treatment plant generate revenue? It's essentially through a flat fee that has been contracted for decades with escalation clauses. In our case, we don't have that. We have the full exposure to market prices, which is what miners love, right? Yeah. So let's think about Amerigo as a utility on steroids.
I like that.
Love it. I love it. And brings me to the next question. With a miner, you typically have a mine life and you're on the hamster wheel. Could you talk about the mine life of of Amerigo? I think this is unique.
Yeah, the mine life equivalent. And there are two aspects to that. One aspect, of course, is with respect to our contractual rights to those waste streams. We currently have a contract that runs to 2037, but it's not as if the curtain drops in 2037. Our original contract only ran to 2021, and we extended it already once. It's hard to have a contract in perpetuity. That's never going to be happening with our partner. So we see this as a contract that will be renewed, or has quite a high likelihood of being renewed as we approach the termination date. So then the second part of your question is really, and what is the mine life of those waste streams? And the life mine of El Teniente, from where we get our material, is 2082.
2082,
Whoa.
guys. That's
Right.
unheard of. That kind of.
I might not be here in 2082.
That's incredible. And so you have this incredibly long mine life that unheard of in the industry. Steady state. Now, in terms of could you talk about how you guys manage your water risk? Obviously, you're treating the water. How are you guys managing that water supply risk?
Yeah, and that's an important question because it's a flagged risk in Chile for mining, right? Chile has been facing drought conditions for a number of years. So in our case, we have the benefit that most of the water that we receive is water contained in the waste material. I mentioned that it comes down through the Andes corridor in the concrete channel by gravity. So you need a lot of water for that material, for that slurry to continue to just be in a form in which it can slide through a concrete channel. So we get most of our water that way. We also have to be intelligent about how we use that water. So in one of the photos that you showed three water structures. Those are our water thickeners. And the water thickeners essentially allow us to recirculate and reutilize a lot of the water that we receive in the facility. So we are quite efficient these days in the water recirculation capabilities that we have on the plant. And another aspect of our water mitigation risk is that we can store water on site, water for a rainy day, for a non-rainy day, excuse the pun there. So we currently have in storage more than 5 million cubic meters of water.
Okay.
To that effect.
Aurora, thank you so much. This was a fantastic overview of the company. A very unique business model here. It's Amerigo CEO Aurora Davidson. Thank you so much.
Thank you for having me over here. Have a great day.
Thank you.
Bye.
All right, everyone. I hope you're enjoying these gems that we've unearthed in the battery metal space. You've already heard about vanadium and you've heard about copper. Next, we're going to learn more about nickel. This is something North America does very well. There's a lot of nickel in this part of the world. So we're going to be hearing from the CEO of Canada Nickel. Don't go anywhere. All right, Grizzle Battery Metals Con, we're back at it. We got Mark Selby here. He's CEO of Canada Nickel. Welcome to the show, Mark.
It's good to see it. No, a few computer issues from Korea here, so
you're here. That's all that matters.
Well, thank you for joining us from Korea, Mark Selby, Canada Nickel. This is a great story. So we're gonna. There's lots to touch on. We'll do it quick, and we got some highlights to touch on. Scott, let's hit it,
dude. We're talking people from UK, Korea. This is a world class affair. Yeah. All right, let's kick it off. So, Mark, to start things off, can you talk about the big picture for nickel demand? Will the growth of electric vehicles be a game changer for nickel over the next decade?
Yeah, 100%. So, nickel goes through these super cycles every 15 to 20 years. We went through one in the late 60s, one in the late 80s, one in the mid 2000s. And with EV demand coming on the scene, we expect to go through another one of those super cycles in the middle part of this decade. EV demand on top of strong growth from stainless steel demand, which is nickel's historical use, is going to double the amount of nickel we need by the end of the decade.
Wow. Okay. So, your Crawford asset is the big one, and you'll be producing nickel, iron, and chromium from that asset. Can you briefly educate our audience on the main uses for those three metals?
Yeah, so iron is used across a bunch of steel industries, but the main materials we've got are the nickel, chrome, and cobalt. The nickel and cobalt obviously used in the EV battery market, but historically were used in alloys, and then nickel and chrome are used to make stainless steel. And so our nickel and chrome product from the project will be used to make, our iron chrome product will be used to make stainless steel, and our nickel and cobalt, we'll be one of the few large sources of nickel available in North America at a point in time where nickel demand in North America is going to go up 4x because of all the EV battery plants that are being built, in the country.
Now, so the Crawford asset definitely looks to be world-class. I mean, if you look at the costs, you look at production size, the resources, basically anything. Can you walk us through the planned milestones, permitting, operational for the property? Kind of what should we be looking for the milestones?
Yeah, for sure. So, we've gone through this project at light speed. I've been in the nickel industry 20 years, and we've got a great team who knows what we're doing with this. So coming up, we'll have a feasibility study done by the end of the year. That's the final engineering study. We applied for permits, which kicked off the clock with that in the middle of last year. So you'll see a series of permitting milestones, which we expect to have in hand by the middle of 2025. And then again, this will be one of the 5 largest nickel sulfide producers globally, so it'll take a few years to build. So we expect to be in production by the second half 2027. Again, just as nickel demand from the EV sector in North America is ramping up. And one of the key things about Crawford is the type of deposit we have has this unique property that when the waste rock's exposed to air, it spontaneously soaks up CO2.
Ooh, so I wanted to talk to you about that because your environmental footprint looks to be interesting. It could potentially be different than how nickel's been produced in the past. So can you talk to us about that new mining technique? I guess it's called lower grade sulfide mining. It certainly looks like this may be the future. Maybe you could tell us about it.
For sure. So over the last 10 years, all the growth in nickel supply has come from Indonesia. Those 2 bars on the right, and because they use a huge amount of electricity. All that electricity comes from coal-fired power. Generally, each ton of nickel gets produced in Indonesia has a footprint of 40 to 80 tons of CO2 per ton of nickel. That's not what the EV industry wants. Our type of deposit, we're in a location in Ontario, in Canada, where we have access to low carbon electricity from the grid because it's all hydro and nuclear. We have highway rail connections so we're not flying in people and materials. And so, again, we can design a mine that has a very low carbon footprint to start. But this class of deposit is made up of rocks that, when they're exposed to air, they spontaneously grab CO2. And we came up with a new process where we inject CO2 as the material is going through the mill. And we can generate 21 tons of CO2 credits per ton of nickel that we produce. So in today's world where people are so focused on lowering their carbon footprint, and there's a lot of talk about what people might do, we can actually, deliver not only a zero carbon product, but, a truly net zero carbon product that's going to deliver additional carbon credits to the planet.
Gotcha. So you've been testing that, and then kind of as you ramp up and get to that production stage, you'll have more than enough time to decide what the scale is that you're going to be using that.
For sure, yeah, and based on what we're going to be operating per year.
Great. Now, I just wanted to ask about government relations, kind of Canada's view on becoming a battery metals leader, because we know there's not enough battery metals. Nickel is going to play an important part. What are you seeing from the government? Do they understand the potential of Canada potentially becoming one of the big battery metal suppliers? Are they behind that future?
Oh, 100%, both at the provincial level, at the federal level. We've got great relationships with all the key ministers in the government. The Minister of the Environment came by our site 2 weeks ago. And so, we expect, to move through the process as quickly as any mining project can. And again, both levels of government have provided direct financial support to, the battery makers, the precursor makers. And again, we expect to see that support for us at the mining end of the industry as well.
Well, Mark, I mean, this has been really interesting. We're definitely going to be watching you guys closely. It looks like you're doing some unique things in nickel. You have a world-class asset. So thanks so much for being on the show.
Oh, no, thanks for taking the time, and looking forward to be in the future.
Yeah, super interesting. Nickel's a core element here, and I think we're gonna keep drilling down. Mark, would love to have you back. We should, and help us understand the opportunity specifically with your asset itself.
For sure, that'd be great. Thanks, guys.
Appreciate it, Mark. Thank you.
All right, everyone. That was Mark Selby, Chairman and CEO of Canada Nickel. Don't go anywhere, because we have one of the leaders in thought leadership coming up. It's WisdomTree. Don't go anywhere. Battery Metals Con 1-on-1 is back at it. Now, we love to not just talk to the corporations, the guys doing the mining. We also like to talk to thought leaders, those who are looking at all the data and coming up with insights for us. So we're very excited to have the global head of research from WisdomTree, Chris Gannatti. Chris, great to have you.
Chris,
great to be here.
Yeah, a pleasure indeed. Global head of research at a very innovative firm in WisdomTree. Thank you very much for you guys are at the cutting edge of most things. So thank you very much for joining us.
Thank you. I'm excited.
All right, Chris, let's kick things off. So you published some great research on energy transition, all the different pieces. So what metals and technologies do you think will be the largest beneficiaries from this shift? And most importantly, are global supply chains prepared for how energy demand is changing around us?
Well, you look at the various metals, you see the demand increasing for things like copper and silver and nickel and cobalt. And then, of course, lithium. The batteries are called lithium-ion batteries at the end of the day. And what people are seeing from the supply chain side, they've probably noticed that companies like Panasonic have, at least this year, announced 2 distinct new plants in the U.S. LG Energy has announced a joint effort and a new plant in the U.S. In accordance with Honda. And of course, we have the legislation that is also focused in the U.S. on ensuring a certain percentage of the battery comes from or is made in the U.S. And that's leading to companies like Redwood Materials, a recycling firm, ramping up significant investments and activity. I saw an amazing stat where by 2025, they're prepared to deliver material that will lead to the equivalent of 100 gigawatt hours in batteries, a similar amount to what Cadle, the world's largest producer, currently made last year. So you're seeing a lot of activities, but we have to remember these metals are traversing the globe currently because a lot of the refining, the processing, it does occur in China. And if you're going from Chile to China to the United States, I mean, you could be hitting 50,000 miles before the metal is actually in the finished battery.
So we've been talking about mining, but that's really the beginning. That's the first step, right? If the U.S. just builds a lot of mining infrastructure, that's not going to get us there. We basically would need the whole supply chain if we're really going to do it right.
That's exactly right. The metals themselves, they don't just come out of the ground, and they're not necessarily all even in the United States. So there are certain locations. Chile is well known. Australia is well known. Russia, prior to the conflict this year, was formerly well known. Canada is well known. So there are certain deposits of these metals, but then they have to be processed and sort of formulated into the right type of electrolyte, into the right type of form that then goes into the cathode or the anode of the battery, such that all these complex battery chemistries can be made to function and can go into that Tesla, can go into that wearable technology that many of us have. Whatever the case may be, the manufacturing is one link in the chain, but there are many other links.
So do you think we're kind of at the early stages of having a domestic footprint may actually be a regulatory advantage moving forward? Are you getting the feeling the government is starting to kind of push companies to say you need some supply domestically for, whatever the reason is? Are we kind of at the early days of that?
The geopolitics of 2022 are demanding that certain things at least are made to look like they're coming back on shore. You've got the big action in semiconductors. So as we know, of the most cutting edge chips, 90% of them are manufactured in Taiwan. And of course, that's very close to China. And geopolitically, the Western world isn't in love with that. And similarly, we look at the battery supply chain. Most roads lead through China. And if nothing changes in 2030, 90% of the processing of these materials could be in China. So you would imagine the world doesn't want to recreate sort of another Taiwan situation in what could be just as important, namely energy storage and battery metals. And so it's absolutely the case that Europe is looking at this, that the United States is looking at this. They want to be able to do more things onshore. And that's one of the reasons at WisdomTree we think recycling, which hasn't really ramped up to scale yet, could be an incredible growth area, because essentially there's the pulling of the metals out of the ground, but then there's the reusing of the metals. And these are scarce metals. They're not in just unlimited supply, and they don't cost nothing. And so if you could keep reusing in that circular economy type of cycle these important inputs to energy storage, that is how I think we're going to win when we get to 2040 and 2050.
Now, I'm curious if you've done work on the recycling. Like, I'm wondering, is there a scale advantage to whoever goes first, or could there potentially be companies that have a regulatory advantage where they have some contract with the government? Like, so I guess overall, you're thinking this is somewhere investors should spend their time because there may be profitable companies that pop up here.
It's an exciting space right now where you're seeing a lot of the companies are still private. They're being funded by interesting players. I know earlier in the week there was the Breakthrough Energy Ventures conference, and they're pretty active in this space to sort of name one sort of large VC type player. And ultimately, the name of the game is to sort of get your operation ready and on a firm footing, such that when that first wave of electric vehicles, because right now electric vehicles are fairly new. If you go back to 2012, I think for the whole year, 120,000 electric vehicles were sold globally, plug-in battery electric vehicles. You come to today, and more than 120,000 battery electric vehicles are being sold in a single week. So there's a lot of expansion in the electric vehicles market, but what's not happening yet is the vehicles are sort of coming to that point where they're hitting the scrap yard and the batteries themselves are needing to be recycled. These vehicles, to the extent that they're well made, they could be on the road for 7, 12, 15 years, maybe even longer. And so by mid 2030s is what the estimates seem to say, you're going to start to see the scale coming up in terms of the number of vehicles needing to be recycled. And that's when recycling gets interesting. But the companies, they're sort of positioning themselves now to get their processes in order.
Chris, can I maybe just a follow on in that, in terms of just my understanding has always been that the recycling would be a very expensive aspect of extracting battery metals. Are we expecting, like, by that time, I guess, are we expecting breakthroughs, or even just in just the formulations of the chemistries themselves? I just want to think out loud, and maybe if you have some thoughts around around that versus going from the original mine.
I love how you mentioned chemistries, because chemistries are sort of this interesting area that are always changing. The nickel, manganese, cobalt 811, meaning 8 parts, one part for every 100% of the battery. You see there that the industry said manganese and cobalt, they're a bit more expensive. Nickel is a bit more abundant, a bit easier to get to. You don't go through the Democratic Republic of the Congo to get most of the supply. So at the end of the day, you're using more nickel and you're getting that similar energy density, that similar output to the battery. And so chemistries are sort of this area of interesting research. Chemistry within the electrolyte, the sodium battery is an interesting one right now, because obviously lithium itself is not unlimited, and depending on the market cycle may not even be cheap. And so the chemistries themselves changing affect the demand for the different metals that you may or may not be recycling. So that's going to be important, because there's going to be a different cost associated with recycling each type of metal. And then I love what your colleague was saying earlier, in the sense that it's going to come down to scale, in the sense that it's highly likely that those players that are able to get those contracts to get the supply of those recycled vehicles coming in and get that access to scrap and really refine their processes. Look at the semiconductor space. Taiwan Semiconductor is as good as it is because it's been operating at scale for a really, really long time. And it's probably not going to make sense to have 15 different battery recycling players, similar to how it doesn't make sense to have 15 different microchip fabrication plants in today's world.
It's so interesting how this is an industry starting up where their input, they don't even have enough of it. And they know there's a timeline of when it's going to come, but that shows you how early we are, because they do have to wait for the input to the cars to get old enough so they can recycle the batteries, basically.
That's exactly right. There's a lot of scrap recycling that's occurring now. And additionally, it's a bit more expensive. So one of the things that happens now is maybe the laptop computer that we're using in this conversation at a certain point, and it's not going to be 15 years, it's going to need to be recycled. There's a lithium ion battery in the laptop computer. But the amount of lithium per unit of effort that it takes to recycle, it's not going to be that high. Nothing like if a Tesla or a Porsche or the batteries that take up the whole floor, the whole lower section of the vehicle are coming in. And so to recycle all of this small stuff and the scrap metal, there's probably a different cost curve associated with that versus when you're getting that pure higher grade material in larger quantity from an actual vehicle battery.
Now, Chris, you put out a fascinating chart on sales forecasts for gas-powered cars versus electric cars. Now, I wanted to ask you, are there a few catalysts you're looking for that confirm the forecasts that are in here? It looks like the forecasts say that gas-powered car sales may peak next year, and then you're seeing a pretty rapid decline from there. What do you think has to happen for you to have confirmation that these forecasts may end up being accurate?
I love it, because in that particular chart, as you'll see on the screen, we're going out 18 years. So when you make an 18-year forecast, you're pretty much certain that you're incorrect. But you just hope the relative magnitudes and directions are there. Now, some of the interesting things that you can point to today is when a company like GM comes out, and I think by 2030 they're saying we're just not going to sell internal combustion cars anymore. I mean, this is an American company built on the back of burning that gasoline. You go back a few decades, the bigger the engine, the better, and yet you get to 2030, they're not selling the internal combustion anymore. And additionally, I don't expect all 50 states in the US to follow the path of California, saying that beyond 2035, you're not going to be selling internal combustion new vehicles. That's a very European move. I think the European Union also in 2035 is saying beyond that point, we're not going to have internal combustion vehicles. But for the Biden administration's sort of plan to actually be accurate, which they're saying they want to be net zero in transportation by 2050, to actually have a chance and mean that the whole fleet, so most vehicles on the road, maybe not 100%, but 98% of vehicles on the road in the US are actually battery electric vehicles, zero emission. For that to have a chance by 2050, by 2035, sales probably need to be even higher than what's in that chart, getting to a level of around 100%, because essentially cars are on the road. They could be on the road 15, 17 years. And so if you're still selling internal combustion vehicles in 2030 to 2035, some of those cars are still going to be around by 2050. You're not going to hit net zero. You could do very well in the US and get 60% of your sales in 2035 in battery electric vehicles. And yet by 2050, the estimates, the models seem to indicate that roughly 40% of the fleet, all the cars driven by the citizens of the United States, would be battery electric. So in the end, we need to sort of move even faster than what those forecasts denote if we're going to be net zero by 2050.
So there's kind of, I think, of three prongs, and I'm trying to figure out what the X factor one is, the most uncertain one. So there's regulation, there's demand from consumers, and then there's just supply of the cars. In my mind, it seems like supply is the most uncertain because everything we're talking about, there's not enough of these raw materials being mined. Do you agree that you think like the uncertainty is greatest in that piece of the puzzle?
So it's an interesting question, because a year ago, if we're having this discussion, the wait time to get an electric car, it was almost like people could get excited listening to this conference. They could go and say, I'm going to get an electric car. And then maybe by this point today, so 12 months forward, they still don't even have the car. And so today, relative to last year, the wait time to get the car, it's getting a bit better. Now, it's not only the metals, in the sense that there was a semiconductor shortage, and electric vehicles tend to be almost like smartphones just as a car. There's so much software. It's almost like a mobile computer that can also transport you somewhere. And so the interesting thing when you look at the cars is the metals are a piece of it. But even, I know the previous guest was talking a lot about nickel. The main use of nickel today, he indicated, was more on the steel side and the galvanizing side, not even necessarily on the battery side yet. And so the metals, that sort of potential for shortage will come into play within maybe the coming years if people continue to be equally excited, if not more excited, to line up to buy those electric vehicles. Now, probably the main uncertainty that we're going to see has to do with inflation and the price of oil, in the sense that in major markets around the world, if the price of a gallon or a liter of gasoline, depending on where you live, is going through the roof, maybe because of Russia, Ukraine, or some other factors, that's going to sort of lead to one adoption curve of electric vehicles and set of demands. If, however, let's say the oil price drops again significantly and the price at the pump for people filling up drops significantly, that's going to slow down the adoption across the board of electric vehicles, and people are going to demand basically what makes the most economic sense for them. So probably the biggest area of uncertainty comes down in the near term to what is that path that we're going to see of gas prices and oil prices to then stimulate further behavior. The best thing for electric vehicle adoption is a crazily high, expensive gas price.
Yeah, exactly. That's a good way to put it.
Very well put, Chris. Can't thank you enough for all the insights. Chris Gannatti, he's a head of research at WisdomTree. Thank you so much for joining Grizzle Battery Metals one-on-one. Really appreciate it.
Thanks, Chris.
Thank you. A pleasure.
Thank you.
All right, everyone, don't go anywhere. We're joined by, so we've been through a lot of the battery metals. Now it's time for lithium. Don't go anywhere. We got the CEO of a lithium company coming up next. All right, everyone, welcome back to Battery Metals One-on-One. If you're enjoying all these insights, I know we are. It helps us. Give us a like, give us a retweet, spread the word this is going on. This is stuff you really don't want to miss if you're looking for where to invest in the future of electric vehicles and renewables.
Yeah, it's been a fantastic morning so far. We've covered it many different ways. I'm very happy to have Steve join us to talk specifically about lithium. Thank you.
Yeah, thanks for being on the show, Steve.
Yeah, pleasure to be here, guys. Great to see you today.
Appreciate it.
So let's start at a high level, Steve. Why do you believe that North America and specifically Nevada is the right place to explore for and produce lithium?
Well, very good question. And I founded ACME Lithium on the belief that we are actually in a crisis when it comes to battery metals, in particular lithium, in the domestic market. Many people don't know that most of the lithium in the world is produced in only a handful of countries, and that includes China, Australia, Chile, and Argentina. And really, the US and Canada and Europe are far behind in the development of critical minerals, in particular in lithium. Nevada was named last year as the #1 jurisdiction for mining globally. There's great infrastructure, there's good technical people, a long history of resource development in Nevada. There's roads, there's power. If you need a wrench, you can go to Home Depot. You're not in the Arctic, you're not in a jungle. Huge benefits of operating in the domestic market. So when I founded ACME, I did look at a number of projects globally, but I focused on the drastic need, and I call it a crisis, for battery metals in Canada and the US. So our projects are well located, and really our goal here is to be an end supplier of lithium to the domestic market.
Gotcha. So you have a really good chart in your investor deck that shows that I did some of the math. The U.S. has 4% of the lithium reserves if you look at the top 10 countries, but it's expected to make up 14% of production in 8 years. So this looks like a huge opportunity for domestic producers like yourself. So why do you think production growth is expected to be so strong in the U.S.?
Well, it really started where people started to recognize that, in fact, there's lithium in Canada and the United States. It's not that the commodity doesn't exist. For decades, exploration and development focused on other minerals. In fact, many assay labs, when they were testing for a variety of commodities, in many cases, they never tested for lithium. And so ultimately, it's been only in the last real decade where exploration and development has started to take place. So again, there's some world-class projects in the US and Canada that are in development. We've got one of the best portfolio projects, I think, out there as a junior. We absolutely need to rapidly develop these projects. There is a estimated need of $42 billion in capital to be invested in our industry. Obviously, the federal government in Canada and the US have recently made some key announcements that are helpful, but we need to continue to educate all stakeholders, including the capital markets, including federal and state governments and municipalities and communities, and work on ESG issues. We can be a powerhouse in Canada and the United States when it comes to a domestic supply. And it becomes really a national security and an economic security issue. We cannot rely on the import of critical minerals from foreign countries. We have to create a domestic supply over the next decade.
Gotcha. Now, moving a bit to your assets specifically, your Clayton Valley project, that's very close to Albemarle's long operating mine in Nevada. For anyone who doesn't know, Albemarle's the largest U.S. lithium producer. So was the history of that neighboring project, was that the main reason you acquired your interests?
Well, we looked at many projects throughout North America, all through the western states and central states, as well as throughout Canada, Quebec, Ontario, and Manitoba. We ultimately focused on Nevada. What many of investors don't know is there's only one place that actually produces lithium right now in the United States, and that's at Albemarle's Silver Peak project. Albemarle's a New York Stock Exchange company, 30 billion market cap. We were very fortunate in that we were able to pick up a project directly to the northwest of Silver Peak. Again, that project's been in production since about 1966. And again, the only production in the United States. So where's the best place to go to explore and develop a project? Well, next to an existing mine. And so we're in the same ancient lake bed. We're in the same lithology. We've got a great prospect here that we drilled this past summer and made a lithium discovery. And then we're rapidly expanding into a phase 2 program here, which I expect to start in the next 4 to 6 weeks. I made an announcement this morning.
Yeah, I was gonna, Steve. I was just about to ask you on that, but you guys have a presser out this morning. Maybe you could give us some more color on that. Sounds very exciting.
Sure. As I mentioned, this is a lithium brine project in Nevada. There's actually not many brine projects in the United States. We're fortunate to have this project. We did 2 phases of geophysics in 2021, and then we drilled our first well this summer, made a lithium discovery. And so we're rapidly moving forward on a phase 2 program. This is an expanded program. We're going to be doing a test well where we can do a pump test and understand the nature of the aquifer and potentially the resource. And then we're going to do additional exploration holes in and around that initial discovery area. So we filed what's called a notice of intent with the Bureau of Land Management. That's been filed recently. We should have approval and acceptance on that notice of intent. And that really covers us for our drill pads, any existing roads, notice of the work we're going to be done. We're drilling to a deeper depth this time, to about 2,000 feet. And again, we've secured Harris Exploration, which is one of the top contractors for lithium development in the United States. And we're hoping to mobilize here in the next 4 to 5 weeks. So really exciting time for ACME. Again, this is our flagship project. We're really excited about the prospects ahead. Lots of news flow coming for our shareholders and investors. And we're really hoping to have success with the drill bit here coming in the next 4 to 6 weeks. Of course, subject to permitting and weather and a variety of things. But we're really excited about the next few weeks coming up.
That's a very exciting time.
That's great. So you did mention processing technology. And so I saw that Schlumberger, the oil service giant, is building a pilot project to test the technology you plan to use to process lithium. This seems like a huge advantage to me. Can you talk about that a bit?
Well, there's a new technology that a number of companies are working on. It's called direct lithium extraction, DLE. And really the thesis there is that we cannot have dozens of football field sized brine ponds to process lithium from an environmental standpoint. And so new technology is really changing our industry, and it has in many other industries as well. And I think what we're going to see here is we're going to see the commercialization of DLE here very shortly. A number of companies that are well backed are building pilot plants around the world. Schlumberger is one of those companies. And in fact, they're constructing a pilot plant with Panasonic just to the east of us. And they're going to be processing brine, which we believe could be very similar to our brine next door. So we're following it very closely. We know them well. We're really excited about their process and the potential there, but we're evaluating others. As I mentioned in my slide deck, there are a number of other DLE companies that have had success, and we're continuing to evaluate them. What we'll be doing here is when we start to pump brine here towards the end of the fourth quarter or early first quarter, we'll be sending samples off to these DLE companies. They're knocking on my door to get samples to test it and understand the metallurgy and see if, in fact, the technology will work at our site. So exciting days ahead, and we're really excited about these key catalysts coming up here in the new year.
Now, as you eventually get to your point where you're at full production, will you be contracting with DLE companies to process your brine, or do you bring that in-house? So kind of how is the industry doing it right now, and how do you think you're going to do it?
A number of companies have operated in joint venture, and I think that's a great way to work, where you're sharing potentially the capital allocation. So there's a number of ways to do it. Again, we're in early talks with a number of these companies. The first test is really to supply brine and see if their processes work at the pilot level or the bench level at some of their existing facilities. And then we'll evaluate, again, based on success, ultimately in having a resource. If that were to occur, we would assess what the right partner would be. So again, exciting days ahead. We're evaluating these on a monthly basis, and we'll continue to hopefully collaborate into 2023 in what is really exciting new technology that's coming to market.
So I wanted to ask you a regulatory question, kind of what you're seeing on the ground. Do you think will the lithium industry directly benefit from any of the recent regulations we see in the U.S.? Defense Production Act or the Inflation Reduction Act. Is there anything in there you see that benefits you directly or the lithium industry?
Well, I've been on a number of panels and I've talked to press about this particular issue. And obviously, at the federal level, whether it be in the US, it started with the National Blueprint on Lithium, which the Energy Department put out in June 2021, followed up by the Defense Production Act. And now new news coming out of the U.S. government where they're investing in processing and production. Canada as well is estimated to be investing close to $3 billion into the critical minerals, in particular lithium market, to advance these projects in Canada. So at the federal level, we're seeing all the right things being said. The key here is at the state and provincial level is how do we get through the bureaucracy of permitting? We don't see any issues in the exploration level. Permitting actually is fairly straightforward. We have great relationships with the state and in the province of Manitoba where we operate. The key here is once you get to a feasibility study is how do we shorten that path to production? And I'm not saying we shortchange ESG issues, but we need to take this money that's being allocated and invest in permitting, and it means hiring a few hundred people in the U.S., more people in Canada, again, so that we can assess these projects, move them forward in a rapid manner. And I'm hopeful that certainly some of this huge funding that's now available is allocated to the permitting side of things.
That's great. That's been really helpful. Well, Steve, this has been a great conversation. It looks like it's exciting times for you guys and for the domestic lithium industry. So thank you for being on the show.
Steve, thank you so much. Lots of great insight and a very exciting timeline ahead.
Well, we're very excited. We've got projects in Manitoba, which we hope to be drilling by the end of the year as well. And then we've got another project in Nevada that we're actively exploring. So again, we've got one of the best portfolios out there for a junior. And I think our timing is very good over the next 6 months to move forward.
Great.
Well, Steve Hanson, CEO of ACME Lithium. All right, guys, don't be strangers here. You're hearing all these insights. Remember, you can ask questions too. If you have a question, post it in the chat. Yeah. We'll do our best to try to get that answered. No. This is a live format. We're all interacting, trying to learn what we can about battery metals. Yeah,
there's a lot of good comments in YouTube. It's been great so far. So keep them coming. And if you are on YouTube, please give it the thumbs up. And also on Twitter, give it the retweet. That helps get the good word out. And the way we put these things together are as learning modules to understand the companies, understand the industries. Scott, who do we got next?
All right, we're going to take a quick break, and we're going to be back with Grid Metals. Don't go anywhere.
Welcome back to Grizzle Battery Metals One-on-One. Scott, who do we got?
We got Dave Peck. He's VP of Exploration and Business Development at Grid Metals. Welcome to the show, Dave.
Oh, thanks for having me on.
Okay, so Dave, let's start with a brief overview of Grid for people who aren't familiar with your company. What battery metals do you have exposure to, and where do you operate?
So we're building a portfolio of battery metal projects in Manitoba and Ontario in Canada, both on the lithium side and on the nickel side. So really two kind of cornerstones for our business strategy.
Now, we've got to talk about your Tanco pre-production agreement. So this is really unique. I haven't really seen something like this. Can you tell us more about the conversations you've had with Tanco on the production side of things and the overall agreement?
Yeah, so just for perspective, Tanco operates the only spodumene producing mine in North America at the moment. And they added a spodumene circuit to their Tanco mine, which is shown in the screen there. That's been in operation since the late 60s, but only recently added a lithium circuit. So really, it's a unique opportunity for us to partner with a company that's already proven itself has an established mill and is producing spodumene concentrate for the world market. So our projects, one of them is called Donner Lake. It's our most advanced lithium exploration project. Is really just a stone's throw away from the Tanco mine. And we have an opportunity to do toll milling with Tanco under a really unique arrangement where we're actually going to share the cost of the mining. We'll split the costs and then we split the profits. So that kind of deal doesn't come your way very often. Our CEO's been working really hard with Tanco's CEO as well. And look, it's just timing. For them, they want to expand their resources, their access to spodumene ore over the next 10, 20 years. And this leads into, I think, the idea of a central Canada lithium hub, which is what the Manitoba government and, of course, Grid Metals and Tanco, we all want that to happen.
Now, are there expectations on your side of what the timeline would look like for that? Like, say, you're happy with your resource and you want to start ramping up this project. How much infrastructure do you have to build and everything to get it to where you can start executing on the agreement?
So we actually started the process of acquiring a permit before we had this agreement signed in anticipation it was going to go well. So that initial work to acquire what's called an advanced exploration permit, which is the main step in getting a mine permit in Manitoba, that's underway. And we expect that process will conclude within about 12 months. And then we'd have the ability to take a bulk sample and start building the critical infrastructure for mine development. And then the final stage is called an environmental act license. That's usually a few months after the issue of the advanced exploration permit. So in theory, we could be producing ore at our Donner Lake project in 2.5 years.
And that's far quicker under this agreement than if you were doing it all from scratch.
Oh yeah, no, I mean if we had to build a processing plant, we'd have to establish a very large resource. Right now, we can get away with just drilling off the upper parts of our known pegmatite resources. That'll put enough runway there for a few years of production with Tanco, and generate some important cash for us, which can be used for all kinds of things. We've got a great portfolio of assets in, as I said, Manitoba and Ontario.
Great. So you recently sold your Bannockburn nickel asset to, of all companies, one of our earlier presenters, Canada Nickel.
Yeah.
And so can you take us through the rationale for the deal, and how are you viewing the Canada Nickel shares you received?
Well, we love them. Mark Selby.
That's what we love. And that's what a good conference is. Everyone loves each other.
I hear some diamond hands. I think
we like Mark. We like Mark. Yeah. No, look, they're in a position to really dominate the Timmins area and the nickel story there. And this is an unusual style of nickel mineralization. It's not one that we're really comfortable with. I'm more of a classic magmatic sulfide guy, Sudbury type deposits, Raglan. This was a very difficult, technically challenging one. It was going to take a lot of our attention. We just couldn't do it. And Mark saw the value in our project. It fit with their asset base. And look, we've got a nice number of Canada Nickel shares. We're obviously cheering for them, and this gives us exposure to their successes in the future. So it's kind of the best thing that we could do for our shareholders, I think, and we're happy with the deal.
That's great to hear. Now, I wanted to talk to you a little about the regulatory situation, province-wide and countrywide. So what's the situation like in Manitoba, regulatory-wise? Does it have the potential both from a regulatory and a transportation angle to become a North American battery metals hub?
Absolutely. So there's a couple of key things here. One is the current government, conservative government in Manitoba, is very pro mine development, and they're really on the critical metals train. So they're in touch with us. They're in touch with Snow Lake Resources, who have a growing lithium asset in northern Manitoba. A lot of people are talking about, a lithium hydroxide plant in the sort of Winnipeg capital region. The government's strongly supportive of that. Those kind of discussions will potentially lead to grants from the government for that project, whoever's going to spearhead it from industry. And on the permitting side, look, they've been fantastic. There really has been a step change in how the government approaches mine development and permitting. And they actually hold your hand now all the way through all the steps. They make sure things are going well. There's no unnecessary sort of red tape, no sort of bureaucracy holding things up. We're really impressed and encouraged. And you're talking really to the senior levels of government when you're talking to them. So we're
Good. So it sounds like
encouraged.
Manitoba's not going to get in your way as you guys
No.
try to build out this industry.
Yeah, and also on the transportation side, Manitoba's shipping corridor right down into the central Midwestern U.S. That attaches to all the critical highway infrastructure in the United States. So it's a huge transportation hub already. In central Canada, we go west, we go east, and we go south, and also north as well. So it can't be better located in terms of getting metal to market.
Oh, great. Okay. And now, in Canada, you look at liquefied natural gas, for example, it had a lot of promise. It's kind of died on the vine. Like there's still some projects maybe coming, but there was massive potential. The government kind of decided they didn't want to realize that. Now, as we look at battery metals, do you think, are things different? Does Canada look to be somewhat constructive on the opportunity for Canada to really lead in North America with the supply of these metals?
Well, they better. I'm a taxpayer. I want to see that happen.
Sure.
No, look,
another opportunity.
They're already a giant in nickel. Okay, it's been Sudbury nickel production started in Canada. The whole nickel market was created on the back of the Sudbury developments, right? The mines there. So we're already a big leader in nickel, and with that comes cobalt and copper, of course. And then on the lithium side, the Canadian Shield is the biggest Precambrian shield in the world on the planet. And it's going to continue to deliver hard rock lithium discoveries of merit. There's lots of kind of concentrations of these lithium pegmatites known already in Quebec, in northwestern Ontario, and in Manitoba. So the shield area and the boundary zones inside the shields are happy hunting grounds. No one really ever invested in that in a concerted way. Now the investment's happening and the discoveries are coming. So we're going to have potentially one of the largest hard rock lithium resource spaces in the world in a few more years.
That's great. Now, could you just tell us about your unique knowledge of the Fox River Belt? How are you hoping to apply what you know of the geology to your new exploration acreage in the western Fox River Belt?
Yeah, so those are our northern Manitoba exploration licenses we acquired last year. We have a huge land position over what is a dead lookalike for the Raglan Belt in northern Quebec, which is Glencore's high-grade nickel sulfide mining operation that's been operating for over 20 years. Very successful. It's a world-class nickel sulfide camp. We think Fox River will be the same. It needs money. It needs persistence. But I've worked on Raglan. I've made discoveries there with Anglo American when I worked there in the early 2000s. I know the geology of Fox. I mapped there in the late 90s and made some initial discoveries in the Fox River Belt and in the area we actually acquired now. So look, timing was everything. The ground became open surprisingly a couple of years ago, and it is recognized as one of the last great frontiers for nickel exploration in the world. And I have the personal knowledge to, I think, guide the company through a successful discovery program.
Great. Well, this has been really interesting, Dave. We're definitely going to be following what you're doing there at Grid. And thank you for being on the show.
Thanks, gents. Have a great day.
Thanks a lot, Dave.
You too.
Bye-bye.
All right, that was Dave Peck, CEO of Grid Metals. Now, don't go anywhere. We're going to hear again from another nickel producer about the potential of nickel in Canada. So we'll be right back.
All right, welcome back to Grizzle Battery Metals One-on-One. Very, very fortunate to have Dave Patterson from Quebec Nickel. Guys, give us the thumbs up. Give us the retweet. I know there's a lot of folks on Twitter that are big fans of the Quebec Nickel. Show Dave some love. Dave, welcome to Grizzle Battery Metals One-on-One.
Thank you very much. Appreciate it.
Hey, I think you have a very special shout out for
yeah, thanks for that. Yeah, I do have a shout out. Dave Peck, the speaker just before me, we worked at Fox River Sill back when he was Falconbridge, and then off to Raglan when he was with Anglo American. We had the joint venture with Anglo up in the Raglan, and we were up there for many years. Dave and I walked the grounds up there many times. We actually have on Quebec Nickel a geologist that worked for Anglo and Falconbridge, all involved in those projects at the time. So it's good to see it, and I mean a lot of respect for Dave. He's done some great work. So everybody, take a look at the previous speaker. Really hats off to Dave Peck for what he's put together. We're also watching his nickel project in the Abitibi that he dealt off to Canada Nickel. So good on him for that.
You know what the read through here tells me, that there's enough opportunity to go around in this industry right now. And so it is kind of, everyone's like lifting each other up. It's not dog eat dog, because they're just, we need a Manhattan project of these materials, and, a lot of opportunities.
1,000,000%. So,
Yeah.
Dave, tell us about Quebec Nickel and the opportunity. Give us an overview of what you guys are doing.
So the company started 2 years ago with middle COVID. I'm looking at the metal complex. I've seen tin, aluminum, copper, all of them running and getting to near-term highs. The only one that wasn't running was nickel. And I've been in the nickel business as a fundraiser for 3 decades. It told me time to get back into the nickel business. I approached a friend of mine that had a property in the Abitibi. He drilled it in 2008. One hole intercepted something that was very interesting. I don't know if everyone remembers 2008. It was a bad year to be in the mining business.
No one was having fun in 2008.
No. And everyone was just trying to figure out how to survive. Well, Glenn Mullen, friend of mine, I always put this one in the back of my head, being, okay, when I see nickel start to go again, it's something I want to be involved in, I'd reach out to Glenn. I did that in July of 2020. I liked what the numbers said that he had, which were, 20 meters of elevated nickel, copper, platinum, palladium. Different from everyone else in the wagon, and I know we've got an earlier speaker that talks about of nickel in Manitoba, nickel in Raglan, Voisey's Bay. Nickel in the Abitibi is a bit different. You're looking at a lot of people that have nickel there. Their nickel is tied up in nickel in silicates. And I was looking more for that class 1 nickel in sulfides. And this told me that if there's chalcopyrite in it, and you can see it, the same physics and chemistry that creates chalcopyrite generally creates pentlandite, which is the nickel sulfide. If we could find nickel sulfides, class 1 nickel, this gives us a huge leg up on others in the Abitibi. Lo and behold, we made an announcement, I think it was in May, of holes 9, 10, 11. They intersected definitely anomalous nickel. When you start looking at the values across 20, 30 meters of intercept, that's within a meter of the surface, and you can calculate your values are several hundreds of dollars of value per ton of rock. All of a sudden you think, gee, this might have some economic value if we can put more tons together. When the end of August, we made an announcement of one of our holes, 28, 29. 29 hit the unicorn. We hit 11 meters. It was 1.44% nickel. People in the Abitibi have been reporting 0.2, 0.1. This is like 10 times that grade, 1.44%. But with it comes almost 1.5% copper. And with it comes almost 3 grams of platinum, palladium, and gold. Completely different than anything we see in the Abitibi, which is why I think I can call it a unicorn and get away safely saying that. I've challenged others to show me drill core that matches this for its economics. So talking about economics, we are right on a highway that cuts north-south right through our property that goes from the mining center of Val-d'Or up to another mining center called Chibougamau. And so we have great access to the property. We have road, rail, air, and power all within a few kilometers of the property. Anyways, that's the 100,000 foot level of the company. Put out a press release yesterday announcing that.
Yeah, maybe you could go over that a little bit. There was a lot of information in there.
So pretty pictures are what we want to look at. We have a picture of our hole 9, which, for not to insult VZZ who drilled back in 08, I'm looking at our hole 9 as being our discovery hole. So our discovery hole. And that hole and this hole that we just announced, hole 38, when you put them side to side, and we took a picture of them, you can see that they look very, very similar. And we know what the grade of a hole 9 is in this section. And we're talking about something that's nearing 0.5% nickel, nearing 0.5% copper. So combined, you're looking at maybe 1% copper and nickel, and also elevated platinum, palladium, gold, and cobalt. So all of those things we talk about as critical metals, we're getting in these drill holes. And again, as I said, the road transects the property. 200 meters off the road is this anomaly that we first drilled. And so it really is probably the cheapest place on the planet to drill, because our drillers can go home at night. They can drive to the site, just pull right off the road and go to work. So it doesn't take 1 or 2 hours to transport your geologists from where they're staying to where they're drilling.
Dave, I wanted to move a little bit higher level for a minute and just get your opinion on nickel. Is there potential that nickel could go through another super cycle even without the help of electric vehicles, just because there's been, a decade of underinvestment, basically?
So how about this? I ask you a question. Can you name in the last 80 years a major nickel discovery, type 1 nickel discovery?
No, I cannot. That answers my question.
That answers your question. We're working on Voisey's Bay right now, which was a Diamond Fields discovery in 1994. I don't know if maybe it's got a 40-year mine life. Some of these others, when we look at Raglan, etc., they've got decades of mine life. But you're also, as you mine, it becomes more and more expensive. So Raglan is underground. The last time I visited Raglan, they're down about 300 meters. I suspect they must be down about 500 meters now. When you look at Voisey's Bay, they get to open pit at the top, but they also have to go underground, which means the price of nickel has to be elevated to pay for the capital cost of going underground. And very little exploration has been done, since 2008 in the nickel business. So, I love to challenge people to say, come up with one that is doing what Canada is doing in Sudbury, Raglan, Thompson, and now what I hope is the eastern portion of the Abitibi.
Yes, I hope everyone listening, there seems to be a trend here where to incentivize all this production that we need higher prices of these metals, which is good for the companies.
Yeah, and when I say I was looking at the nickel market, and it was, I think, $4.50 a pound. By the time we closed the deal with the VZZ group on acquiring the property, nickel was approaching $9. And before we started drilling, nickel had hit something like $20. Now it's back down to something more reasonable of 10. But I mean, these are staggering numbers for a guy that worked nickel when it was $2.50 to $3 a pound, and thinking it was a heyday when it went to $3.75.
Now, I wanted to just talk to you about some operational milestones. Maybe you could give us a few things to watch for over the next 6 to 12 months. And do you have an internal timeline for when you'd like to see a resource report completed?
Well, okay, the second question first. The answer is yes.
Yes.
All right, go, next question. Go.
Yeah.
Go to my next question.
So, I'm not going to put a timeline on, something like that. When our drill program started in March, we're 7 months into a drill program. We have drilled right now. We've explored less than 1% of the property. We have 150 square kilometers of the right rock type. And I'm talking about sulfur-bearing rocks of the metasediments, etc., iron formations, nickel-bearing rocks of ultramafics and mafics. And so where we are at the Fortan, where we're drilling, we have these results, fantastic results. That's less than 1% of the property. And so, we've got a lot of work to do to explore the entire property. Where we are at Fortan, I just want to talk about the momentum of what's going on. So we had one drill. we added a second drill, and that's on the west side of the property to explore things that we have not discovered yet. And then we made the decision a couple of weeks ago to bring a second drill onto the fourth hand. So we have 3 drills drilling. They drill 24/7, and so our momentum is pretty much a hockey stick, where it went from having a geologist that worked on weekends to having, I'm going to say, we have a crew of a dozen now. And we have taken up every bed and breakfast, motel room, etc., between Sanitaire, which is just to our south of the property, and Quebec, which is just to our north, to be able to house drillers, geologists, geophysicists, the geotech teams. And so that's the great thing. Our guys go to a home, and it takes them about 20 minutes to drive if they're in Sanitaire, Quebec. Where if they're in Val-d'Or, it's an hour away. So it's like a commute in Toronto is, I don't know, measured in hours. In Vancouver, it's not much better. So, here you're commuting from your, wake up in the morning, you're driving, your coffee's not even cold when you're walking onto the property.
Fantastic.
Wow. Well, it sounds like it's exciting times for nickel exploration in Canada. So, David, thanks for stopping by and telling us more about what you're working on.
Yeah, Dave, this
Guys,
is very
really appreciate the time that you were able to spend with me. I am so excited that you guys are doing critical metals. Oh, this is one of the things that this country needs. I could get on the soapbox for one more second and say, yes, Quebec is the best place of all to do work. I've been working out of Quebec for the last 3 centuries, it seems. But I've been there for 30 years. They are building 3 battery plants. They've said they're putting a lot of effort into home growing the battery industry. So what do you need for batteries? You need David's lithium. You need my nickel, copper, cobalt, platinum, palladium.
Wonderful.
Awesome.
And that's great takeaways, right? Because obviously in mining, not indifferent to oil and gas, in any extractive industry, having a jurisdiction, a government work alongside versus against is a make or break in this industry.
Yep.
Fraser Institute's rates Quebec in that top 10, probably in the top 3. So it's why I live in Vancouver and work in Quebec.
That's great. All right. Well, Dave Patterson from Quebec Nickel. Thanks so much.
Thank you, Dave.
Guys, real fun. I appreciate it.
Right. Thank you.
All right, everyone, don't go anywhere. We still have a packed lineup. Next, we're going to hear from Quebec Silica. So we've covered the spectrum. Now we're going to Silica. You're going to learn a lot.
And in the jurisdiction that matters, Quebec.
Oh, yep. There we go. So.
Ray, what's going on? How's it going? well, hey, listen. Welcome.
I don't know how I got confused with Aaron Gunn.
Yeah.
That's good.
You guys must be cousins.
Welcome to Battery Metals 1-on-1. And listen, thank you very much for for joining us. And we're for those out there in YouTube land, give it a thumbs up. Hit it, and in Twitter, give it the retweet. Ray, what's up, man? How goes? Great to have you. I know we tried to put everything together last minute, make it all happen. Thank you. Appreciate it.
Oh, no problem. Thanks for having me.
Thank you.
So, Ray, maybe can you give us a brief background on Quebec Silica and your operations in the province of Quebec?
Yeah, you bet. Quebec Silica is an industrial minerals exploration, development, acquisition company. At the moment, we have 3 silica projects in the province of Quebec. Am I able to share my screen and just try to show some things? Does it work that way, or
no? We got a few visuals we can throw up.
We have some visuals. Chatting, we have some visuals for you that we can throw up.
Just go to town. Describe whatever you want.
Yeah. So I guess the vision of Quebec Silica is to be an integrated provider of silica or other industrial minerals, kind of within, call it a local Quebec supply chain. This is a battery metals interview, but battery metals, and other sort of green technologies were.
Well, battery metals. It's when you think about it broadly speaking, obviously that there's that one aspect, but it really does you're really, there's no question. What's the battery used for? Well, those applications matter too, right?
Exactly.
The solar panels, etc. Right? It's all critical metals. I guess you could really put it as critical metals, right, Ray?
I did hear rumors that it might be considered a critical metal in the future. I don't know if I think it's just considered industrial at the moment.
Now, so we think silica is an underappreciated industrial metal. Can you give people who aren't familiar with silica's uses kind of a macro overview of silica? How does it work? How's it used?
Yeah. So, silica is the second most abundant mineral on Earth, or element on Earth, next to oxygen. Mm-hmm. There's no shortage of it, and it's kind of everywhere, and it's in our everyday lives. It's ubiquitous in everyday life. Your windows on your house, windows on your car, solar panels, microchips, computers like your iPhone. It's kind of everywhere. Dishware, you name it. So as I mentioned, it's abundant. It's kind of used everything, concrete, building supplies. It's used everywhere. But what makes it tricky is finding it in high enough purity, kind of close enough to infrastructure, roads, towns, ports, and in a large enough volume to make it economic.
Is it so? Basically, it's heavy, and so that's why the transportation can be a significant cost.
Yeah, more like a gravel pit versus sort of a gold deposit. It's there. There's a lot of it. Like our project, which we'll talk about, like obviously in a bit. We know there's silica there. There's a band of it that runs up the side of a mountain. So it's a lot different than, say, exploring for a critical these other metals. We know it's there. It's just getting it to market is the challenge in a short period of time, I suppose.
Got it. Now, we talked about silica's industrial uses, but what are some of the roles you see silica playing in the green economy? Like the way we use silica, is it going to change with the rise in batteries and renewable technology?
I think so. As I mentioned, it's ubiquitous in everything. As the population increases, silica is going to be used more. It's just inevitable. Now, if we continue to increase the amount of, say, solar panels and use in batteries and in all this technology, then yeah, silica is going to be used ubiquitously throughout the quote unquote new green economy. So there was a slide I want to share. It's not in your visuals, but great photo. If you remember back in, what's the date, 2020, Elon Musk's battery day, and it just right across the top, silicon is awesome and inexpensive. We can't do a batteries metals thing without talking about Elon. Anyways, and same thing, the most abundant element on Earth's crust. And then he has here his other point is it stores, what does that say? I don't have my glasses, 3 times more lithium than graphite.
Right.
So that's straight from the horse's mouth. And the cool thing about that battery, whatever it's called, Tesla battery day, is that was in September 2020, and we had got the ball rolling on this Quebec Silica project earlier in 2020, sort of like as soon as, call it spring, winter 2020. So we were just right ahead of this, which I think is great.
Yeah, we get that visual up. Let's bring that visual back up. I thought that was
can I get that? Different one?
It's just a kind of usages and global mega trends. I thought this was useful. Kind of
population growth. Yeah, said that. Alternative energy, the solar panel photo or little image there. Yeah.
Now let's talk about your asset. Can you tell us a bit about is it Charlevoix Silica project? How do you pronounce that?
Charlevoix. Yeah, that's correct.
Got it right.
Interesting project. It came across. So I'm a geologist, engineering geologist. That project came across my desk. I call it like late 2019 or early 2020, somewhere in there. Yeah, that's the slide. And right away, I thought it was interesting because kind of right next door, a few kilometers away, there's an active silica quarry activated by a company called Cytec. They've been operating there for, I don't know, like 50 years or something like that. And on the geology map, I don't know if that's in your slides, but the silica band essentially runs from their quarry. This quartzite formation runs from their quarry, and it's mapped to run right into this property, and it's just right there at surface the entire way. So so we sent out a bunch of geologists and couple of young geos in 2020. They scouted it out. Yep, there's silica there. And then we hit the ground running in the spring here, and have been going all summer long, just scouting it out and clearing off all the kind of the moss and the overgrowth and getting a real feel for how much silica we have there. And there's quite a bit.
Yeah, so maybe help investors that want to keep tabs on you guys. What are some of the operational milestones, say, over the next year we should be watching for?
Yeah, so I guess the big one from our last couple news releases are we've entered into an MOU, a Memorandum of Understanding with HPQ Silicon Inc. They are a technology company that has a proprietary technology called I have it here, Pure VAP quartz reduction reactor. Fancy new technology that creates silica into silicon, the metal.
Is that the picture we put up earlier that shows that process?
What picture was that one?
Maybe can we throw up the first slide that we had there?
Slide 1.
Yeah, it was slide 1. It was quartz to raw silicone.
I guess this is sort of the old way of doing things.
Okay, right.
Have some new fancy way. So,
arguably, they probably uses less energy because that's obviously got to be
that's got to be that's for sure. Yeah. Now it's proprietary. I don't know but what I do know is they need material to run in and test their technology. So they've given us some specs out on what they need, and we've mobilized. Over the last little while, we've been building and mobilizing, tweaking this little mobile pilot plant, which we have stationed right near the project, and we're just tweaking it and running a bunch of tests on the raw and trying to meet their specification. So big milestone here this year is provide them with some quartzite that meets their spec that will work with their technology. And be able to produce low-cost silicon metal in a new, fancy, innovative way. So that's a big milestone.
Lovely.
So hopefully we do that this year. And then just in terms of exploration and development, basically get as much work as we've done out there in the field before, the snow gets too deep. We have plans to drill some little geotechnical holes and put together call it a volume of how much silica we have. And then also just processing all the samples and all the work that the geologists and field crews did all summer to be able to figure out, the purity of the deposit and where the good zones and the bad zones are and stuff like that. So, that was a bunch of things. I didn't really quite lay it out in milestones, but yeah.
Now we know. Now we have the roadmap.
There you go.
Well, Ray, I want to thank you for powering us up on Silica. We're going to be watching Quebec Silica and see what you're working on this year. So thanks for stopping by Battery Metals.
Appreciate it.
Thanks a lot, Ray. And that process, sounds very interesting. And, some like innovation is what usually drives demand for resources, right? It can change them pretty dramatically. And if you get these breakthroughs, all of a sudden, the game changes and you get these, you almost get these entire changes in the demands for these minor metals. That's been one recurring theme, Scott, like in the conference is like, just that change. It can happen quickly, but it's going to be driven by price or by technology.
Yeah.
Right. Thank you.
Take care. Thanks.
All right, guys, we got a very special guest coming out next. You better not get lunch yet. You got to make it. You got to make it through a few more speakers. So we have the editor of The Electric. It's a very popular magazine covering everything electric vehicles, batteries, the whole thing. His name's Steve LeVine. He's going to come up right next. So don't go anywhere.
Thank you.
Your voice, it echoes in my mind. It echoes in my mind. Voice, it echoes in my mind. echoes in my mind.
All right. Welcome back to Grizzle Battery Metals One-on-One. Got Margo here.
The ringer. We brought the ringer back.
The newest
to
member.
do these interviews.
Let's go. Guys, it's been a tremendous morning of learning lots of different metals. Lots of baby metals, big metals,
Yeah.
tons
Different
of metals.
strategies. Yeah, we covering it all here.
So listen, the Battery Metals One-on-One, we have a terrific host of companies, but we have to thank our lead sponsors. Let's get that table up there. There we go. Our lead partners here, none other than WisdomTree. These guys are the most innovative ETF firm there is. They do it all. Commodities, tactical, thematic, digital assets, smart beta, and factor investing. That's WisdomTree. These guys are the tops. And when you think about vanadium, there's only one company to know of, and that's Largo, the most innovative vanadium firm. They are the leader in cost and also innovation, and they've recently launched a Largo vanadium, Largo Physical Vanadium Corp, and that's their physical vanadium vehicle that's akin to the Sprott uranium one, and then Red Cloud Financial Services. Red Cloud, one of the great mining focused investment banks here in Toronto. They do fantastic work. Their research is open source. Go hit them up. That's Red Cloud. And then finally, Capital 10X, when you're looking for visualization and understanding of the metals that matter, and specifically battery metals, capital10x.com is where you go. They also live on Twitter.
All right, we're going to hear from our next guest in just a second.
Hi, and I'd like to welcome a very special guest, Steve LeVine, who's the editor at The Electric, which is a newsletter that focuses on next generation batteries, electric vehicles, and autonomous driving. So let's just start there, Steve. Before we dig deep into the questions, can you just tell our audience a bit about what The Electric's about?
Yeah, thanks, Margo. So we started up just over a year ago, but it really goes back to Battery Day. Elon Musk, right around 2 years ago, announces the 4680 battery and how it's going to cut the price of the battery in half, bring about the $25,000 electric car, and this triggered a mania in EVs, in batteries, in battery metals, in SPACs, in startups. And it also did in the requirement for analysis of all this. So that's behind us starting this newsletter, and it's meant for folks with skin in the game, and that's mostly investors, but we've also got a lot of folks who are in the startup game who are our subscribers as well.
Amazing.
Really interesting. So everyone listening, you should definitely go check out The Electric. But just moving on, you can't really have a discussion about the EV transition without wondering, is the US at risk of being too reliant on China when it comes to electric battery metals? And we have a chart that actually is done by the New York Times that shows what's the percentage of battery metals produced and processed in China. I don't know if we can pull that up, but Steve, what are your thoughts on that?
Well, I'm sure what this chart is going to show, and that's that the United States is almost entirely. It's not just the United States and Europe are almost entirely reliant on the Chinese supply chain. What China has done over the last decade is put around $100 billion behind establishing and made a big bet. We're going to own the battery supply space. That means processing all these metals that you've been talking about during this day, and that's it. Those are the commanding heights. That is the strategic center. The United States is not there. Europe is not there. So China owns the 2020s.
So for everyone who's watching, what the chart basically says is if you look at where these battery metals are processed, and you look at all of the battery metals, China's like the juggernaut. They're between 50 and 80% of all the processing capacity. So you really can't avoid China is basically what these charts show.
And I just have another question for Steve. I know the U.S. is clamping down on China severely when it comes to semiconductors. Is there risk of China retaliating back to the West for its access for battery metals?
Short answer is yes. And just to flesh that out a little bit, I've been looking at this question myself. It turns out there's some reporting today out of Beijing that China was caught completely by surprise by this move by Biden. And for those not familiar with it, it's cutting off virtually all access of China technology companies to advanced chips. That's cutting out the legs out from under Chinese tech companies. And but here we're in a position which Scott just laid out in terms of the processing chain. Okay, we've got the commanding heights on chips. They've got the commanding heights on the batteries and EVs. Couldn't China retaliate by at least curtailing the access of U.S. and European EV and battery companies to that chain? I think the answer is yes. Whether it we'll see. But there is an antecedent for this. In 2010, China cut off the supply of rare earth metals to the rest of the world. So let's keep watching this space. That's a possibility.
I actually lived through that. I know you did too. I remember being in the space. There was a little bit of a mania outside of China in the rare earths industry. And then China ultimately stopped, they got rid of those restrictions. But you're totally right. We could be looking at a rare earths 2.0. Hopefully not.
And so how can the U.S. position themselves better to dominate the EV market or be less vulnerable?
Right. So that it's not about dominating the EV. When it comes to the U.S., we're not going to dominate the market. Neither is Europe. But U.S. and Europe can put themselves in a much better position to serve themselves, to serve their own car companies, their own their own EV industries. And a big step has been taken by the United States. I mentioned that figure, what China spent over the last decade, 100 billion. The U.S., the Congress, and passed the bill. Biden signed it. It's around 100 or 125 billion dollars, so around the same amount of money spending to set up the U.S. battery supply chain. And the first 20 companies to receive monies from this, $2.8 billion were announced yesterday. And just the first analysis of it, taking a glance at the companies, it looks like a portfolio approach. There are some sure bets, some companies that are already well established. They'll deliver what they say they're going to deliver, and then some very high risks. You wonder how they got any money, but that's what investment is all about, right? You put your money on some sure bets and on some high risk. It's the whole value chain. It's soup to nuts, the whole waterfront, all the metals, all the processing, and you can see what the objective is. They want to get, meaning the Biden administration wants to get points on the board very, very fast. So these are its current technology, and it's meant. You can see what it's meant. We want to get some cathode material, some processing going very, very fast in the next 2 or 3 years. This is the bet to accomplish that.
Steve, can I just ask a quick question on that? How far back is America relative to, say, like, let's just use China as a benchmark? Like, are we like, is this just a little too much, a little too late, kind of, or should this have not been planned like a decade ago? It just feels like this is so last minute, and especially in a time period where the prices of everything is so dear. It feels like China's everywhere in Africa already. And we're blocking ESG so big companies are having a hard time, growing out their mines. I'm just struggling bigger picture on how we can, how we can do this effectively and quickly when maybe that should have been the strategy 10 years ago. But maybe I could be wrong here.
Yeah, no, you're not. You're not wrong, Thomas. So that's exactly what happened. We were all in the game together. China, the U.S., and Tesla. By the way, Tesla, the two big players who didn't get it wrong, who had the vision and the risk-taking nerve, the country of China and Tesla. They were all there together in around 2009 at the time of the financial crash. Everyone was taking a bet. What's the next? How do we get out of this rubble? And the thinking was, well, electric cars, batteries, but after 2 or 3 years, the U.S. as a country dropped out. Tesla and China stayed in the game. They spent the next decade in investing against the consensus. Remember, Tesla was ridiculed up until just over 2 years ago, right? And they, now everybody's, wow, maybe Elon was right, and now it's maybe we better get our act together, or we're going to end up like Kodak, like Nokia. Former big players. And so that's why I said in the very beginning of this conversation, China owns the 2020s. We're scrambling to catch up. All of these investments are so we can be in the game in the 2030s.
Right.
Steve, do you think we've seen some regulation now just in the past year that seems to be supporting the industry? Is this the beginning of more to come? You think the U.S. is going to step up or should step up to kind of incentivize the industry to go faster and harder?
It is stepping up. No, this is this big money that's been allocated. That's a serious thing. It's very impressive, and it's changing the game, right? So Asian players, European players, China is unhappy about this. South Korea is. They all, it takes a while for things to dawn on people, but they know they've got to compete with and invest in the United States. The actual regulations are being written right now as we speak. The deadline in the law is December 31. So the enacting rules, how will this law actually be executed? We'll know by the end of the year, but the Treasury Department is doing this. If you guys are watching this show right now, you Treasury guys, email us, tell us what you're doing. Do you guys get the Treasury guys watching you?
Yeah, we have a very diverse group of investors, so you never know from day to day.
Yeah, so we have a lot of institutional. We both Scott and I were on the buy side, and we have Chris Wood, who's one of the great macro strategists. So our distribution list is very diverse, all the way from deep institutions to our good friends in retail land, which actually propel the world.
All right, you Treasury guys, if you're there, call us up, tell us what you're doing.
Now, our first speaker from Benchmark Mineral Intelligence made an interesting point that he is seeing money come into the industry, but it's not coming from the traditional players, mining venture capital firms or PE firms or the miners themselves. It's a lot of these companies like the car companies that say, I need these materials, so I'm going to have to invest in making sure I can get them. Is that kind of something from the people you talk to, you hear that is the trend? There's all these companies just realize we have to kind of vertically integrate if we're going to get to where we need to be in a few years.
If Andrew Miller says that, then it's true. Just to add some meat on that bone, if Andrew didn't hit this other point, is that there is a real shortage. The place that the U.S. is lacking is in nerve. So first, we didn't have the vision that China did to stick with this through the teens. So we weren't in this position that we're in now. And also, we haven't had the guts. So we've got one person, Elon Musk, and there's no one else who's got the nerve Elon Musk has got in terms of getting ahead of demand. And so you can say, okay, so it looks like the EV demand is coming. It looks like the EV revolution is coming. Therefore, I'm going to put down, $100 billion, $50 billion. I mean, to mine, right? To mine lithium, to mine nickel. They're not putting down the money. We have it is I think an embarrassing situation for the United States that the government is more risk taking than industry.
Mm-hmm.
And I know you recently wrote an article and you said the next hurdle for the U.S. battery industry is talent. And I just want to focus on another point is who do you think is leading the EV market when you compare like a Tesla versus a China auto car maker like BYD? Are we falling behind?
Yes, we are. We're behind. So Tesla's number one, and by a long shot. So BYD has caught up in terms of the number of EVs sold. It's neck and neck right now. If you're going right, BYD is coming up very fast. So in the sales from last month, it was almost at the same level as Tesla. So therefore, it will pass Tesla. So what the two players, big players, Tesla and BYD, and everyone else is in their smoke.
Yeah,
that's good.
What do you think recently of the Toyota CEO coming out and saying he believes there'll be massive shortages for the lithium and battery grade nickel? Like, do you think that, automakers are taking next generation batteries this seriously, or what do you think about his issues with the deficit going forward?
Or was he just talking his book? You know what I mean? Like, is he is he just so far behind that he's like, listen, you know what I mean? This is not the show. It's over here.
Hydrogen.
Yes, right.
Yeah, no. So Toyota definitely was wrong about hydrogen, but I'm with the Toyota guys. So I agree with that. I think that, and I'll tell you why is that we're in a shortage right now. We cannot make. So the auto companies around the world, including the Chinese and everyone else, cannot make as many EVs as can be sold by a long shot, and that deficit is growing. And by the end of the decade, I wrote about this a few weeks ago. They'll be able to make just a little over half of the projected demand for EVs, and the reason for this is the shortage of lithium. It's the shortage of nickel, but gasoline prices are off the charts. So people want they want EVs. So the average EV price is $64,000. So name how many people who can afford or feel like paying $64,000 for their next car. So therefore, there will be a market for gasoline saving hybrid and plug-in hybrid vehicles. Toyota and VW are really the only major automobile companies who are staying in that market. I think they're playing a smart game. There's going to be a long tail market for those vehicles.
Steve, I got a quick question for you. I guess, early on I was like, the whole, like, just going full electric just didn't make a ton of sense, given the infrastructure that wasn't built, and, but the market has evolved in such a weird way. Not logical to me, obviously, but I'd love to get your take on why is it that full EV took off when literally everyone still has range anxiety. You still see all these crazy lineups. When that whole hybrid market, particularly, people, the concentration of people in cities, how did EVs did Elon just sell sexy and that's the story? Or, why has the hybrid market stagnated so long relative to EVs?
When it seems like you can have your cake and eat it too with
right,
those.
Exactly.
Yeah, yeah. This is, I do think, Thomas, what you just said, Elon sold cool.
Yeah.
I think that's what, it's very similar to the smartphone, right? The smartphone is cool. It does a lot of nice things, but does everyone on the earth and their kids have to have one? Yes, right? Everyone has got, if you don't have one, there's something wrong with you.
Right.
Right. And so this is what's happened. I'm puzzled in the
Well,
same way. Yeah.
Well, coming to the smartphone, a great point here. Anyone who is owning a BlackBerry, I'm like, what is this junk? I'm a power user. I need that keyboard. What's happening? But we were forced. We were pushed, right? Even though the productivity, you were giving up a productivity, drop, it's just almost the cool got sold. And what are you going to do?
Yeah. You have to, when you're on public transport, if you're not staring down at a smartphone, you're just, hey, who's this dude?
Yeah.
People are scowling at you. You look up, everyone's looking at you with disgust.
Yeah.
Oh.
Yeah. Hey, well, Steve, I mean, I'm sure there's a lot more we could talk about. This has been really, really, interesting for us. And I would recommend anyone out there, if you haven't been reading The Electric, I would check these guys out. They do great work.
Yeah, Steve, really appreciate it.
Thanks so much. Nice talking to you guys.
Yeah, look forward to having you join us again. Well, we're going to continue to cover this sector, and you bring a lot of great insight. It's a great conversation. I think they're big questions that have still yet to be fully answered, and we're fleshing it all through right now. But the nice thing about this is the story evolves almost on a weekly basis.
It's going to be with us for a long time yet.
The good thing is you'll have a lot to talk about and write about.
Exactly.
So that's good.
Thank you, Steve.
Okay, see you.
All right, everyone. Battery Metals one-on-one. We ain't done yet. We got 2 more speakers, and do you want to tee them up for who's coming up next?
Yes, we got Capital 10X, and we got Red Cloud. We're going to take a little micro break here, and we'll be back in a sec.
Your voice, it echoes in my mind.
Grizzle Battery Metals one-on-one. We're back, guys. The train hasn't stopped moving. The party keeps going. Lithium, cobalt, vanadium, you name it.
My head is spinning. I got to tell you, Tom. I gotta sit down and catch my breath after this is over.
And if you follow Grizzle Cons and our conferences, they get better and better. It's like fine wine. And by the afternoon, it's just like we're glowing here. We got Mount Margo here. So listen, first of all, I got to thank our sponsors. Can we put up the sponsor page? Bing bong. Lead partners, WisdomTree, the best. Largo, the best. Red Cloud, the best. Capital 10X. Hello.
Let's just start there. Dwayne, who's partner of Capital 10X. Just starting off, can you tell us a bit about Capital 10X and what you guys do?
Yeah, well, sure. At Capital 10X, we find investment opportunities in emerging growth sectors with a particular focus on base metals and electric metals. Our work's really visual and impactful. I'm sure you guys have seen it. I'm sure your audience has seen it on Twitter. So we believe that Twitter is the best vehicle for companies, especially junior caps and junior miners, to basically interact with retail investors so they can jump into the conversation, and then they can also have a continuous conversation.
Dwayne, it's been interesting, right? Because so we've seen a lot of your, Capital 10X is the visual leader in the minor metals markets. You guys are focused on the electric metals particularly. But that dynamic has really changed in terms of when you think about like, you know, the chat boards, and now everything's kind of, you know, the discussions for mining companies were like these back alleys of like, you know what I mean? Fucking you know, chat boards of like, you know, whatever. But now it's all like, it's like the entire world has come to Twitter for a good reason. You know what I mean? Shed some light on this stuff, you know, and people have a two-way conversation. Very different dynamic, right? In small cap investing, would you say?
Right, exactly. So obviously the world has changed. We have a lot of interaction between different company owners, different facets of companies, and then also the retail investor, from the institutional investor all the way down to the retail investor. So you can even find a small retail investor, if he gets the voice and he gets angry, he can shake his fist at the C-suite and they might even respond, right? We live in a crazy world.
Dwayne, I can tell you, I've seen that happen many a time in Canada. We see it, you know, obviously cannabis, you know, we've seen that, you know, where basically the everyday investor has, you know, the same voice with CEOs. And it's well, in cannabis, it's usually angry.
It's democratizing
investing. It's disgruntled. If you know, if you need a vehicle to show your, you know, to be disgruntled and to shake your fist, then, you know, social media is for you. Jump on Twitter, you know, with the rest of us, and get angry and ornery, right?
Yeah, but you know, but the other side too is people are learning a ton. And you know, there's a lot of great digestion of big ideas. You know, and you guys, Capital 10X, has shared a lot of big ideas. Do you want to just talk about? You've done a lot of work. I thought what was interesting was vanadium versus lithium. That you had a great report there. You want to just give the quick high level highlights there?
Yeah, for sure. So we put together a comprehensive report about lithium ion batteries versus vanadium redox flow batteries, or VFRB. So we looked at different facets of it, from energy density to power density. How long do the batteries last? What sort of impact are they going to have moving towards the green economy? So with lithium ion batteries, we found, you know, these are your batteries are universal batteries. They have a powdered electrolyte that's basically attached to some coils, and they're wrapped around. So they're very compact, and they're going to give you a big burst of energy, right? But they're not going to give you that duration. Versus vanadium redox flow batteries. These are basically have an aqueous electrolyte. So the electrolyte is in water tanks, and it's going to give you more of a steady state of energy. So this is ideal for your industrial uses, for your institutions, whether it's a hospital, school, etc. And this is good for a grid level operation because it's going to give you that steady state sort of energy. And at the same time, it's going to reduce your carbon emissions. So it's a low carbon sort of technology solution. So we found this really fascinating.
And so it was interesting. And so, you know, when you think about like where lithium excels, it's kind of like your cell phone, like these small, like rinky dink applications. But then when I see Elon saying, I don't know, you know, the power wall or whatever, you know what I mean? I mean, should he really be using lithium versus, say, like a vanadium beautiful slurry that can be recycled kind of thing?
Right,
exactly. Vanadium is beautiful in a slurry form, but it seems recyclable and nice versus like whatever the power, you know, and then there's the flammable aspect of lithium as well.
Yeah, safety. Can't forget safety, right?
Yeah, I just wonder, like even I just saw a vicious, like some crazy car accident, but basically like the car just went, it just went in total flames.
Right.
And I think that's, you know, I think, you know, we're still working through obviously a lot of it, but the most exciting part about batteries is where the chemistries are going and what applications will work with what the right places. Now, in terms of, you guys got a big November ahead. You want to just give a little bit of an overview what's coming down the pipe for Capital 10X in November?
Well, yeah, for sure. We're really busy right now. We're putting together the most comprehensive resource for miners. So if you're an investor, if you're into the small cap miners, if you're looking at battery metals, electric metals, if you're looking at gold, silver, copper, then you can definitely get with us. Come to capital10x.com and we'll have some comprehensive information for you. So we're really excited about that. That's coming online over the next month. You're going to get some more video reports. You're going to get some more visualizations as well coming from us very soon.
Yeah, very exciting. So, you know, it's an in-depth. It's arguably going to be one of the most interesting launches on the Capital 10X side. So if you're following Capital 10X, he does the visualizers. You know what Visual Capitalist does. Capital 10X takes it moon next level.
Right, we take it to the next level, right? We're
The
basically
insights, right?
2.0, the new and improved sauce, right? So
Exactly.
It can look nice, but if the insights don't come with it, what do you got at the end of the day?
You know, I can only look at so many
Exactly.
maps and where things are. Tell me where I make money. Bing bong.
Exactly,
Hey,
exactly.
listen, man. Dwayne Hope, that's Capital 10X. Thank you so much, sir.
Thank you,
Oh,
Dwayne.
no problem at all. Thanks for having me. Good to see you guys.
All right, guys, I wouldn't go anywhere because we've talked about lithium a bit, but we have an expert who's done a lot of work on lithium refining technology, and he's going to help us figure out what's going on there and where the opportunities are. So we'll be back in just a minute.
So to wrap things up, we have Koby Kushner, mining analyst at Red Cloud Securities. And just starting off, Koby, thank you for joining us. But I want to ask you, can you just give us a high-level rundown on what types of companies Red Cloud invests in?
Yeah, sure. So we're an investment bank, and we're mining only. So I'm actually, in a past life, I was a mining engineer. We only touch mining stocks. So everything from precious metals to battery metals, even the odd fertilizer here and there. But these days I'm very focused on lithium. So I cover the full spectrum. That's hard rocks, brines, and clays.
That's why we wanted to bring you on, because I have a bunch of questions. I was looking at your recent work, some very interesting stuff on the technologies and the companies. So you published an interesting guide on different types of lithium extraction technologies. Now, can you tell us about a few of them and give your opinion on which technology you think has the most potential? And I'll throw a slide up while you're talking to that.
Sure. So yeah, this slide here, full credit to Alex Grant. So thank you, Alex. Yeah, so pretty much DLE is heterogeneous. There's no one-size-fits-all solution, and that's something we really stress in the report. Every brine chemistry needs to have its own tailored DLE. So DLE stands for direct lithium extraction, and it's a way of getting lithium out of getting it out of the brine without needing evaporation ponds. The way I kind of simplify things is I think of it like a coffee filter, right? So you got your coffee grinds that end up on the filter. Imagine that's your lithium. Afterwards, you wash it off, and then you got the lithium void brine that goes through the coffee filter. So it's not quite like that. It's a bit more nuanced. So sorption is that's actually, some people are more into that. That is what Livent, for example, is using in Argentina right now. They're using it in conjunction with evaporation. but I am seeing more dollars being thrown at ion exchange, and that's ion exchange. That's not really a new process. That's something that half of uranium production does, and what they call ISR mining. And then it's also what is used in if you have a water softener in your house, that's what's used to soften your water.
I do have one of those.
Yeah, so there you go, ion exchange. It hasn't really been applied to lithium on the commercial scale yet, but it looks like things are getting exciting, to say the
So
least.
of those three, which do you think is getting the most capital right now as far as R&D?
I think ion exchange is where I'm seeing it. I'm seeing a lot of dollars being thrown at it. So one company I cover, E3 Lithium, so they've got brines out in Alberta's oil fields, and they've developed their own technology. As I said before, the technology isn't anything new. It's really it's the sorbent material, the material that is your coffee filter, in my analogy.
That's a great example. Now, I'm just trying to figure out how early days are we in this technology, because typically it's been the evaporation pits. It sounds like the companies are realizing that's not feasible if we really ramp this up. Are companies mainly still testing this, or are there companies that have fully scaled this new type of technology and are using it successfully?
Yeah, yes and no. So a lot of what we see overall, DLE is still in its relative infancy compared to evaporation, right? But there is the odd commercial scale operation. So Livent is one that I named before, and then there's also been at least 3 commissioned in China since 2017. Pilot plant, there has been a lot of success at the pilot plant level. Lake Resources is that's a Red Cloud banking client, by the way. They're looking to enter production pretty soon, and they're going to be working with a company called Lilac Solutions.
So are you seeing our operating costs for this technology still a bit higher than the brine pools, but they're coming down rapidly, or are they already at certain facilities? Are they already cheaper?
It's hard to say regarding what's currently commercial. Companies do like to keep that close to their chest, but based on what we see,
sure.
Yeah, it's a lot of it. Ion exchange isn't a black box, but the proprietary sorbent, that is a black box. Like, we don't actually know what it's made out of. But we can kind of infer based on what they have studies out on it, like economic studies. I saw you briefly pull up a slide there.
Yeah, maybe we can put that back up. That was one of my questions.
Yeah, so all these companies, you can look at their OPEX there. That's actually those are great numbers. These are all DLE companies, by the way. These are, I want to say these are on the lower cost compared to lithium production, whether that's from evaporation or from hard rock sources.
So could you talk a little bit more about this? Because I see there's some interesting takeaways where I highlighted the grade of the assets, but then also what the returns of mining that lithium are. And it's not specifically the higher the grade, the higher the return. So what are like the nuances going on there?
I love that you mentioned that, because that is a point that mining investors especially really need to wrap their head around, right? So in the mining world, great is king. I'm sure you guys have heard that phrase before. When it comes to DLE, it's arguably more so the deliverability, right? So if you can really get high flow rates out of your wells and you can produce a lot, then that's gonna impact your overall economics. So think about it like this: you got Project A. Project A has 6 times the flow rate as Project B. Okay, Project B has double the grade, however. Even still, Project B, even though it has double the grade, they're going to have to drill 3 times the number of wells if they want to reach that 20,000 ton a year production rate for lithium chemicals. So that also eats into your capex, right? In Western Canada, it's about $3 million a well. So having bad deliverability can totally kill your project, and then it also hurts you on the OPEX, because now you got to maintain and permit 3 times the number of wells.
Man, I'm having flashbacks to my days as an oil analyst. So, the flow rate can make up for there being less oil or less gas in the stream, for example. So you can't just say, we hit like 30% lithium brine deposit, and that means it's going to have the best returns, not necessarily.
Yeah, no, it's oil and gas. Like, there's a lot of overlap with this stuff.
Very interesting. So now, what metrics should we be looking for when picking lithium miners to own? What are some of the indicators of success that you found?
So, of course, every mining investor, any investor really, no matter the commodity, no matter the project, we look at IRRs, NPVs, payback, capital intensity, etc. For any mining project, don't ever take those numbers at face value. You got to look at the assumptions. One of the first assumption, of course, is the price assumption. What are they using to arrive at all these numbers? Prices are up over 700% in a couple of years' time, and mines can last decades. So a lot could happen. Does the project still work at historical prices?
I want to ask you about prices. They're up 7 times in a short amount of time. Can prices stay this high longer term based on what you're seeing? And if not, are there indicators you're watching that would tell you prices may come under pressure, or even if they do, they're going to settle at a higher level longer term? Like, how are you thinking on where pricing is now?
I think we're in a multi-year bull run in the lithium sector. Sure, things will go up and down, but to expect a crash back to historical prices, I don't see that happening anytime soon. So one thing everyone looks at really is the cost curve, right? So our costs to produce lithium, are they going up, or are they coming down? Right now, it seems that costs are actually increasing. Even so, we're so disconnected from the cost curve that it's made people skeptical and uncomfortable, right? So if I compare it to gold, you sell gold for about double the price, double the cost to get it out of the ground, right? For lithium carbonate equivalent, it's somewhere like 12 times, right? So that alone makes people uncomfortable. But you also got to look at the supply demand. Demand, I don't see that going anywhere. I don't know about you guys, but I think demand for EVs and energy storage is, I don't see that changing.
Literally, they're putting these batteries in everything and anything, man. I think they're like mobilizing, they're mobilizing
little.
Your
head soon.
Well, like I was like, for little kids, they're giving these kids electric things that can go so fast. I'm like, man, just going to cut off for this. Cut off for this craziness.
They've gone too far.
Let them power themselves with their legs. But lithium is going everywhere. We are electrifying everything.
Yeah. So, and then, really, you got to be paying attention to the supply side. What's going to cause prices to correct? In my view, it's going to be the introduction of a sudden amount of new supply. But that's the thing. We haven't seen that. What new mines have actually come online and declared commercial production in the last year? We haven't seen it, right? So, and then how fast can they actually grow to keep up with demand? Albemarle is saying that they need to grow 300% production. That's their goal in the next 10 years. Good luck, but let's just assume that they can achieve that. And let's assume that every other current lithium producer can achieve that. Demand is still set to increase 400%. You're not going to make that up. So in my view, it's going to have to be a supply shock that's driven by innovation, whether that's alternative sources of lithium, so clays or lepidolite sources, or DLE, direct lithium extraction. I think, and we've already spoken about direct lithium extraction, but that's why I think it's so disruptive, because it has that potential to bring in new supply.
Now, I have a third one for you. What about battery technology change? But we had a guest on earlier who made it sound like that happens very slowly. I mean, you see these battery technologies takes decades to come up with. Do you share that view that it's not like, oh, cobalt's, the price has gone up 20 times. We're going to engineer out cobalt. We can do that quickly. It doesn't work like that.
Yeah, look, I think the battery technology, by the way, I'm no battery expert, but here's my opinion anyways.
Yep.
I think it's always in flux, right? As something gets more expensive, people switch over to something else, and then that becomes more expensive. Meanwhile, people that are on team chemistry A, they're still looking to make that better and manufacture it for cheaper.
Now, just asking you how lithium relates to the batteries. If you look at the overall cost of a battery, lithium's still a reasonably small proportion, right? So even if pricing's gone up 7 times, it doesn't change the whole cost of a battery a lot. So is there room for lithium to be, more expensive and still people will want to use it in batteries?
I mean, do they have a choice at this point? So, like,
No.
you know, think about this. Like, every dominant EV battery chemistry right now, lithium is a constant throughout it, right? Like sodium, sodium batteries, you know, they're a ways away, and they don't have the energy density. Vanadium redox batteries, which you know, our previous guest was talking about, that's awesome, very promising, great for grid energy storage, but it's not something you could put on an EV because they're massive.
For sure.
Yeah. And I know I've read some research reports on air batteries, and that's like in a lab looks amazing, but it takes years or potentially decades to bring that to market, make it work effectively. So sounds like lithium it is.
Yeah, and I'm sure you guys have maybe heard of solid state batteries as well, and even that also has lithium in it.
There you go. Yeah, you can't avoid it.
Well, Koby, can't thank you enough. Yeah, no, Koby, fantastic overview, and we'll have to have you back again. You know, keep you know, you've got one of the most easily one of those sexiest you know, areas to cover. This doesn't look like we're fixing this problem anytime soon.
Yeah, it's been a lot of fun. Appreciate it, guys. Thank you.
No, appreciate it. Thank you.
All right, Koby Kushner, Red Cloud Securities. Thank you.
Thank you. All right, you know what we're gonna do? We're gonna do a little energy strategy debrief with the Grizzle fam. As you know,
Let's
guys,
go.
Margot is the latest analyst covering energy. And she joined us. You're doing the energy fix series. Tell us about it.
Yeah, so the Energy Fix series is we're basically going through a deep rabbit hole on what can be done to solve the European energy crisis when it comes to natural gas, uranium, oil, the EV transition. That's basically what we're doing.
And so all of that, and so you get a multi-part episode coming through?
Yeah, we have a multi-part episode coming through. We have one with Arjun Murti coming out soon, and Shy Girl, as well as
Lee Gehring, who's a legend. Yeah, so you know, we're tapping the best, the absolute best here. Guys, if you're seeing this, retweet this. We're gonna talk broad strategy here, what Margot's coming through with. So that's a multi-part series, and that, you know, that Duberg one was great.
Yeah, no, it was good. I think he did a deep dive analysis on you know, the energy density ladder, why it's so important, and why politicians really shouldn't be shying away from nuclear energy.
No, right, and so listen, guys, if you're seeing this, give this the retweet, give it the like, give it the friendly family thing. Listen, and follow us on YouTube. So Scott, in terms of, we've just digested all of this today. We've had a position in, you know, arguably probably one of the best performing lithium, mid-large cap lithium stocks.
Yeah, one we didn't have on today, but it's been just a juggernaut in the market.
Oh yeah, so you know, SQM, and obviously, but you know, a big takeaway for me here is that clearly, I don't know, Scott, like you and I have covered a lot of growth sectors, and I never quite seen a vertical like this where I think you put it best. It was like, listen, there isn't even like, I'm going to like slight my, you know, I'm not going to slight the company before, you know, but most of the times it's so competitive, you know, they got bad rocks. They have, you know, their stuff is so expensive, but this is just like, we need all this stuff. And I don't think we're going to fix this problem like literally tomorrow to next year. It's like, it's going to be exactly.
They're all singing Kumbaya and drilling, you know, at the same time, which, you know, free markets are free markets.
Yeah.
It's dog eat dog, but this tells you that there's just so much opportunity.
Huge.
These guys are like, I don't need to worry what someone else is drilling. Whatever I can drill, they're going to buy it. And so they're not worried about what the other dude's doing.
Yeah, that was kind of like, you know, a big takeaway. And I think we're going to do these debriefs. I think it's critical to do these debriefs. But like one thing that came away, I'm like, you know, this is like, so BMI, Mark, what did you think? Like that, those were interesting answers from BMI in terms of like, literally, you know, they're like when you start adding wedge layers of recycling as your supply, that's telling you something. Like that's telling you we don't have any more
an
of the
industry
primary.
we don't have.
Yeah, we
is
don't have
the
more of the
relief
primary
valve.
stuff, right?
Yeah, it's not even set up.
And is recycling even a profitable business model?
Well, that's it, right? Recycling requires. So I covered a lot of this, and you know, there were interesting recycling stocks I was always looking at, but you know, the commonality between all recycling stocks. Show me a good mine and show me a recycling stock. And I in the recycling side, I can show you a price that should be like, you know, 20, like it literally, the break even price is always significantly higher. So if basically the break even case for making all of this happen requires this wedge of recycling, it tells you how high these prices will reach. I guess, what is the bear case, Scott? What do you envision the bear case?
I think the bear case has to be supply, right? If there's a price response, so people are making so much money from this business, they'll start drilling more and more, and you'll see money flood in. So what always happens, like rare earths, anything else, you just have a flood of supply, and it overwhelms demand, and then prices crash. But what I like here is, a price doesn't go up 7 times in a year unless supply demand is way out of whack. It's super messed up. So we still have so much more demand than we have supply. There's still a period where you could get even higher prices, incentivizing, that flood of supply. Even if we got like the money that's being put in now isn't enough to bring that flood of supply yet. So we're still early in the whole story.
Yeah. And in typical, and in addition to that, and we didn't really touch on this in a meaningful way, but, this is an interesting sector in the sense that it's ESG that's driving the demand for these. And listen, I'm just talking about consumer preferences, man. You talk my little 4-year-old is like, yo, that's a Tesla. I'm like, when's the last time he's actually pointed out a GM, whatever. and
GMC Sierra?
I'm thankful my 12-year-old actually understands, the quality of a Lamborghini and why that car is what it is. But literally, with our conversation with Steve LeVine, I'm like, you know what I mean? No one can really point to that whole aspect of, listen, why didn't the hybrid makes a ton of sense. Hybrid is like, listen, you're in North America, you drive long distances, you're not going bing bong bing, you know what I mean? Like, you're going far places. Why is it that a full electric won over hybrid structurally?
I think you got to say marketing, right? What did I know about electric vehicles at the early days? No one knew anything, so you were told things. And so you just heard from Tesla that like a big battery, range is good. This is what you should do. You should not be going piecemeal. It should just be get rid of your oil and move on to electricity.
So I got to ask you, Scott. So bigger picture here. Obviously, we'll try. We're trying to get Robert Friedland. Obviously, he's a busy man, and
scheduling conflicts and all.
Margo, what's the quote with Robert Friedland's quote? It's a good one.
He said you can't have an energy transition without mining.
You can't have an energy transition without mining. And I think the rubber's hitting the road. You can't heat your home without natural gas. Like, we're almost in this weird place where everyone's dreamed of these like fanciful, there's that Twitter meme, like if we had something and it's all like a futuristic world, that Twitter meme. I just feel like, the last decade and a half has been this world where we fancifully dreamed about this world where everything kind of works. And now you realize, well, wait the fuck. I want these electric vehicles, but I don't have the battery metals. And
people aren't thinking about it. They're just saying, oh, I love my new electric vehicle, but they're like, but I hate oil and I don't want any oil floating around. And it's like, well, what's driving your vehicle?
Well, and no mining either, right? It's kind of
the whole value chain.
You boxed in this thing where you're like, okay, listen, you don't want this, but you just want the fancy car, but not realizing that it actually required some metal. Yeah. So it's kind of funny, like in the bigger picture here, we're in this world where we have entered the era where the guys who get stuff out of the ground, I don't care what tribe you are, whether you're an oil guy, comm guy, that there hasn't been investment in the ground. If you're an EV guy, well, now you should be putting your money in the mine, not in the in the electric vehicle. Like, that was kind of the takeaway for me.
I got a great analogy. This is like if we all just wanted to eat more and more Twinkies and we were so hungry and we just demand for Twinkies was skyrocketing. But we don't like gluten. We're like, no more flour in our Twinkies. But we don't worry about growing gluten-free flour or finding another supply. You just say, I don't want any flour, but I want tons of Twinkies. This is basically what's happening here.
Yeah. Basically. Twinkie overload. Yeah, listen, guys,
Tesla Twinkie overload.
Yeah, if you guys are, hold on. There we go. Okay, we got some, I want to ask you about your strat. I'll stick around. Hey, Lava Boy, what's going on? Yeah, so, give you the guys. Thank you for everyone tuning in. Give you a high level about what we're doing and how we think about things. And also we got we're actually going to open up the research and kind of just be like, hey, like a big part of what we do is quantitatively based. And Scott and I are like, we flow through the numbers always and think about how we quantitatively think about how all the subsectors, growth sectors we live in. And it is really at a reasonable price. And that has been actually, that's been incredibly well-working strategy. Obviously, everything's been it's been a tough market for everything. But if you actually were shopping for at a reasonable price and growth, you outperformed the S&P 500, you outperformed NASDAQ, and by a significant margin. You're outperforming all of these things, and you sure as hell were outperforming growth at any price, which is ARC. And I think if I really had to break it down, Scott, I think what's her name at ARC? Kathy. This thing is so. Margo, you looked at this thing, this private fund. Is this going to be her undoing?
I don't know. We all know that investing in venture capital is a lot risky, and considering her funds down to 72%, I don't know what it's at, but since the peak, I don't know. It seems like it's a bit dicey.
Well, so the dicey part is, okay, so in private, can you hold long term in these private? Can you be able to? What's her turnover ratio? Remind me what her turnover ratio is.
I don't know the exact
72%.
Okay, 72% is her turnover ratio. So clearly she's not a long-term investor. And
she's not.
If you invest in private equity, you can't disclose what you're investing into clients. So
So we have short-term. She's a short-term investor getting into assets you hold for a long time, and the investor base. She wants to give access to retail, which is a good thing. Retail should have access to every asset class.
They want to,
but they don't necessarily understand the volatility that comes with that and what it means. Sometimes they think they don't need that money for 3 years, but maybe they do.
Yep.
And so you're putting two things together that historically haven't worked for that asset class.
Yep.
And it's going to be a huge test of what happens. And I wouldn't want to be in the vehicle that's testing the waters.
No. Little things from that, Kathy. Anyways, not to belabor it, but there is an absolute bubble in growth at any price. Kathy's, she keeps motoring on
flying taxis, colonizing Mars, space travel, things like that.
Whatever she's on, and the crazy thing is, somebody it's really we're kind of it's down 75%. Well, how much more can they be? Well, let me tell you why there can be more. Because Margo, have people been net buyers of the ETF or net sellers of the ETF? Have there been more units added or sold?
I think her audience is extremely loyal.
Loyal, they have not sold units in the ETF.
Nobody has sold.
Right? So they haven't sold units in the ETF. They've held on. In fact, they've continued to buy. These people are morons. And the crazy thing is, and that's Kathy Wood herself has spurred another group of people. I think there's you've got all these now ETFs that are we're living in such a crazy time where people are willing to put out strategies to be anti the Jim Cramer long short.
Oh, Jim Cramer.
And
counter Jim Cramer.
Right, and the SARC ETF, thing. So SARC is the short ARC.
Yeah.
That dude has I want to say last I checked it was 300 million. 300 million,
wow.
Literally, just incredible stuff going on.
But Tom, I think I should mention there's not just one risk to being in a fund that's down that much. Yes, it could go lower because these companies may still be overvalued or they just were too early to their markets. But what's the risk if it just doesn't go anywhere?
Right.
What if the market rebounds, and we're seeing a little bit of green shoots in the market now, but that's another risk you take is you're just stuck in a vehicle that's going nowhere and you may be down 50% or more.
Yep.
You're not clawing that back. Well, every other asset is going up. It's called opportunity cost. So you really have to think closely about that. It's not just, do I lose more money in a fund like this?
Yeah. It's the other crazy part on that fund, the private fund, is that can I take all my money out every quarter? If I was you can't.
When is it allowed to turn over? Does it take a year and a half for everyone to get out if they wanted to? Or it was every 3 months, a third can get out or something like that.
It's very small, Scott. Literally, so I can put my order in, but if 500 other people put their orders in, we're all pro rata.
You're waiting at least 6 months, I think, to get any money back.
Yeah, so it's all curious, I digress because that's where the bubble is, but where the value is in growth at a reasonable price. And growth, believe it or not, anyone who's running a true growth at a reasonable price strategy is outperforming the S&P 500, which is filled with defensive
and bonds, which is
bonds. So when people are where is the opportunity? It's at a reasonable price, but still growth, right? and because there is still a bubble in these defensive stocks. So what I would say is interesting here. We have an interesting barbell opportunity. Scott, what is the Grizzle barbell that is the most interesting right now? Two things.
Yeah, so we've been using this with a lot of success privately, and now it's publicly available to you guys. What you do is you buy those big tech companies, kind of the larger companies that you may think are more mature, but as you've seen over time, they acquire these smaller startups that are what we think of as growth revolutionary companies. So you have, it lessens your volatility, it lessens your risk, and the returns can still be attractive owning that barbell core of the big tech names. Then you buy those smaller ones we think of as, breakthroughs in different sectors. And someday you may have a Facebook buy them or someone else acquire them. And so you're winning both ways by lessening your volatility with still gaining exposure to the revolutionary companies.
Yeah, so it's almost barbells within barbells, right? So right now the value is in like a beaten up Google. Like, I'll tell you one thing, man. I'm not going to be using any other app to like go wherever I need to go other than Google. Now, Google has dominated search, and until my brain stops working, I still won't stop using Google. So there's huge value in those big tech companies, and as Scott says, you can
and at their prices right now, there are pretty attractive prices versus historically where they've gone.
Well, exactly. And then the higher level barbell is, don't be focused on one pillar. So our focus is like, listen, all of this today is brought to you by one thing only: technology. Why would you live in a world where basically everything you're around is technology and not own any of it? So own some technology at a reasonable price, and own the stuff that comes out of the ground that no one cared about until they realized they don't have lights.
That's going to drive the technology of tomorrow. You can't get the technology of tomorrow without all the people we've talked about that are on the ground throughout the world mining right now.
Totally. 1,000,000%. Well, guys, that was a phenomenal, Scott, Margot, guys, thank you so much. That was Grizzle Battery Metals.
You guys make it all possible. Thank you for being here. Hopefully you learned a lot. Check back to our YouTube channel. If you subscribe there, you'll make sure you don't miss the next conference that we throw. And you can find us on Twitter. We're going to be talking a lot more about all these themes.
Yeah, guys, thank you. And if you haven't already, I would really appreciate those who are on YouTube. Please give it the thumbs up. That would be huge. And tell a friend, which retweet. Tell Margo, tell them where they can find us.
Oh yeah, you guys can find us at Grizzle Media on YouTube and on Twitter and on TikTok. So make sure you give us a follow.
All right, everyone. That's all she wrote. Till next time.
Till next time.
Voice, it echoes in my mind. Voice, it echoes in my mind.